Good morning. How you guys doing? All right. What an epic stream card. I mean, we knew she was gonna pull that shit, right? Stream card excellent. Who made it? Uh, Someone posted the picture in Discord, and then I asked someone in the Louvre to write size queen on it. Like Lit Spaceman did it for me. Yeldon eats the corn the long way. Maybe. I think we gap fill in 724, 716. The big upside gap? Well, we're in a better position to do it. There's still a gap on futures on 724. But we may just fail the trend test again. That's what we're doing right now. What do if JPOW cuts? Carry trade collapses a lot faster. Everything right now actually puts JPOW in a really fucking weird position, right? Yellen's issuing bills at the same rate again. Yuta surprise cut rates with no prior announcement, right? So Japan's getting angry, tired of getting their currency literally fucked in the ass. And then dollar's down to like 103 right now. People are trying to pile into bonds, but yields are shitty, so they don't really want to, right? Because if JPOW doesn't cut rates, they're gonna lose so much value. No. Japan didn't cut rates. Yuta raised rates. Surprise hike, sorry. NQ up 2% yesterday. Well, it was down 3% yesterday, so it's kind of just even, right? I said it like 5 times yesterday, but you ignored my comments. They didn't say shit yesterday. The only announcement from them yesterday was that they were gonna reduce their JGB buying over the next 1 to 2 years. The futures expectation for them to cut rates was at like 15%. Pressure on carry. How does the environment change? Tighter margin? Yeah. Yeah. It'll be harder to pump. It'll be harder to hold pumps. I mean, it's a total leverage reduction in the system, right? Also, depending on how many assets are sold in order to meet the margin requirements of the trade, we could see we could see some significant like asset price reduction as well, right? So this is what triggered the failure of Bear Stearns, right, and Solomon Brothers was that MBSs were downgrading as they were being sold into the open market or mark to market in order to meet the margin requirements for the carry trade, right? And so if that's going to happen now, so if we're going to start to see hard assets sold off, um, those assets are going to devalue, and that's gonna damage all of these GSIBs balance sheets. No, no, they're not prepared for that. Usually asset devaluation, especially on MBS and CMBS, is not part of the bank stress test, right? The bank stress test is mostly like vol up, equities down, possibly like a reduction in bonds, right? Like bond prices fall, but they don't stress test for like hold to maturity assets declining in value. Who the fuck made these tests? People who wanted banks to pass them. Oh wait, the banks. Self-regulation, Bob. You gonna make a test for yourself that you can't pass? It's ridiculous. It's normal for multi-trillion-dollar market cap companies to swing 8% every other day, right? Yep. So QQQ saved by Microsoft CEO saying, "Trust me, bro," basically. Yeah, so Microsoft actually made I wouldn't say it's an expected move, but it's the right move, right? They were like, "Okay, well, we've spent a bunch of money on AI, right? We're sorry, but that AI is going to return us money next year." So they've moved the goalposts into another stadium, and it appears that people are okay with that. Yes. X. Which product has the highest leverage and room to fail? QQQ? Well, QQQ is still down like 10% here. The acquisition of Activision went through like last year or something. Massive sold call squeeze today. No, actually, here there's not too much to squeeze. We pushed up over the short dated stuff. But the bigger piles of in the money put delta really don't squeeze out until we get to like 5550, 5600. So here, let me show you guys the delta on all expirations here, and this will give you an idea. So this is all expirations for the SPXW. Boom. So even up here at like 5510, we really haven't squeezed out a lot of put delta, right? And at yesterday's close, there just wasn't much put delta above us at all. So we've gapped over that range of kind of flat delta from yesterday's close, right? Which isn't too hard to do. And we did clear the kind of major resistance at 5500, but we still would need to move up quite a lot more in order to squeeze out the majority of that delta. So the market maker bid here, kind of neutral. Like bid to cover is kind of neutral. We don't have CTAs as a buyer, right? So, and we're still below gamma neutral. Actually, I think we're still below delta neutral even. So we're not in a bullish range. Not back in a bullish range. As a matter of fact, we didn't even test delta neutral this morning. We came about $4 shy on our high. Delta neutral's at 55.1646. So up here. Well, IWM is just dying. Yeah, that's going to be an effect of this. Yeah, not good for IWM. Not by any means. But IWM still has support 2220. It's probably not going to make any big moves until after the FOMC decision. And if JPOW doesn't lean hard enough into a September rate cut, right? If he basically doesn't promise it, if he's not dovish enough, people are going to freak out, and they're going to sell their bonds, and they are going to probably dump their Russell holdings and maybe some of the Dow stuff. You wrote 55.14.64 last night. For what? Oh, 55 for. Why do I have it on here as 55? Oh, maybe it was just $2 off. Let me double check it. I might have just put it on my chart wrong. That's some crazy shit go down last night. Ah, yeah, that's right. 55.14.46. So we came $2 short. Just hit the wrong key there. There we go. Sleep's not an option right now. Does he want to now? The BOJ fucked him. They kind of did. Yeah. They kind of did fuck his opportunity. Good morning, Trash. Do you have any long dated deep out of the money puts? No. Deep out of the money? No. Not really. I have some 5550s on SPX. I have a dead straddle leg from last night. which very easily could go back in the money today. And I have like a whole bunch of TQQQ puts at 80. Nice, good, Godfrey. Yeah, oil ripped this morning. Bond sell off, yield spike, SPX puts print would probably be pretty bad for indexes. Fair to say the AI bubble is popping. We're getting some disillusionment. I don't think it's popped given Microsoft's recovery. But people are feeling less confident in it, which is the start. Chicago PMIN, cool. I don't think anyone gives a shit about it today, but it's generally the case when you have days like this where there's just so much data that a lot of it just gets ignored in favor of like the bigger data sets. But Chicago PMI is down, which should be bullish for IWM, I guess. Nvidia up 10% today. Perfectly normal move. Is the QRA bad? No, I mean, it's what the Bulls want to see, right? Bill issuance is going to remain elevated. It also means the TGA is probably going to be at fucking nothing by the end of the year. Yeah, I'm out of the calls on my strangle already. JPow's not gonna fucking hike. He's too much of a pussy. Gherk, but Japan and Moody's. I mean, you can't really have a failed auction, right? Because someone has to come in and, like, primes will still have to come in and provide liquidity. What does this mean for Go EV? Nothing? Houses in Japan got a lot more expensive overnight. Carvana thinks everything is bullish. It's okay, guys. Carvana's debt that's currently in excess of their assets and financed at a 10.25% rate is just super bullish for the long term. Also, they bought most of Hertz inventory of Teslas at a steep discount which are now worth even less than they bought them for. I just shit and farted all over the rowing machine. Is this bullish for my puts? No. What does this mean for your long-term AQN pickles pick? I'm wondering. Should be largely unaffected. They definitely benefit from rate cuts, should those happen. Well, he was banned, and then he tried to scrape the Discord, because he's crazy. So, banned again? Houses more expensive in Japan, only if you need a mortgage, though. If we're willing to go a little further out, apparently not terrible. Also, in rural areas, they have IKEA, abandoned homes. Yeah. Those have earthquakes, which would kind of suck if you live somewhere rural. Do you think we chop until FOMC 2 p.m. release, 2:30 p.m. JPOW talk? There's a good chance, yeah, that bulls try to hold it here above 5,500. They may not be able to, but I think this is the best place to stabilize things. I got my house 1 hour out of Tokyo for 35,000. Nice. Are you adding more puts here? No. That would be dumb. I think JPow's a cuck and he won't do anything. So I want IWM puts. Should I buy before or after FOMC? Up to you. Boy, oh boy, who would do that? What have you done, Nick? What about 55.25? Was this similar to the pump before we crashed during COVID? No? Well, could be. Depends how high we go. Good evening from New York. Brock in Korea. Look at the thing. You best believe I'm ghosting him. All right. Does crossing a major psychological level like 5,500 usually mean a big move is coming? Big bounce or big drop? No. Just stable. This overnight pump, a de-risking action to Japan hikes, or just a pre-Powell pump? I mean, we're pumping back to where bulls are more neutrally positioned, which is pretty common prior to big data. You buying calls for Nvidia earnings? No. No. I don't play earnings. What if J-Pow does full nerd because he's pissy that Yuta outcucked him and says hawkish cut in September? He finna for real on God. No cap. What would be the IWM PT with no rate cut? I'd like to see it fall below 220. That'd be dope. So I'm losing my shirt because some idiot intern positioned into calls 200 points higher than the price before FOMC. I'm going to go with you're losing your shirt because you didn't have an out of the money call hedge, as I have warned several times is necessary when trading below delta and gamma neutral. Also, because you didn't have a stop or didn't take profits prior to probably the biggest data day of the entire quarter. But trade futures, you can't hedge. Yes, you can. Way to victim blame, Kirk. How dare you shame me using logic? Well, it's an expensive lesson, but I hope it's one you learned. You can buy NQ, short ES. You can just get a contracts on whatever instrument you're using. So if you're like short NQ, you can get an out of the money call on NQ. How far out of the money do you pick up for bear put spreads? Is 7 DTE too much? I don't have any bear put spreads. Bear put spread, like debit put spreads? Usually those are pretty short dated if I have them. How dumb is a 5600 call right now? It's either stupid or genius. I would say it's right in the middle of those two. Can they stop killing the 10-year for 5 minutes? Nope. Is it cheap enough to be potentially genius? I think it is, right? That's why I said it could be genius. And August 16, 5600 is like $3,100 right now. And end of day 5600 is $32 right now. For your hedge, did you have something like monthly debit spreads at 54.75, 55.25? 54.85, 55.10. How is there still gas to go up more? We could go up to like 25 here. Just on positioning. A break of 25 could see a test of 50. Although that's a lot less likely. But it could happen. A break of 50 could see a test of 5,600. I'm starting to understand sold calls at 510 because that's where weekly neutrals are. Well, they weren't, but they've gotten there. Chance of NQ getting back to 20K before FOMC. That seems like a stretch. Which JPM collar is rolling today? The like little one. Is it likely to see a pullback before the meeting with downside positioning coming in? Probably not. No chance the downside positioning has come in yet because of the drastic move from close, right? I mean, there's already just a bunch of downside positioning there. Like, none of the puts from overnight really closed off. They have less gamma, but they're still there. So if we were to slip 5,500, we would probably fall back towards the like 54.60, maybe 54.50 range. Did you buy calls? I have calls. I closed my straddle calls first thing this morning, but I have called debit spreads up here that were like my barrier hedge kind of, and those are currently fully in the money, so I don't really need to do much else. I mentioned you sold your straddle calls. Your puts are still out? Yes. Yeah, I still have my puts from close yesterday. They're paid for, but I still have them. What's a barrier call? So you can kind of replicate a barrier option by like a knock-in option by buying the underlying, so like long futures, and then having the call option out of the money with like a stop set for a pullback. And I've done that by, buying futures and having an out of the money debit spread. So I make money between 54.85 SPX and 55.10 SPX. It's a Fourier transformation. It breaks down a signal into a sum of sinusoidal functions with, yeah. And then, like, the transform extends the series to, how to explain that? Into, like, a continuous spectrum. Ooh, Laplacians? Why don't humans reproduce by budding? I don't know. I don't really care about China's PMIs. BOJ stuff, I wrote about it in the Discord and extensively on Twitter over the last, like, year. Well, for a continuous signal, it does. Still kind of bearish on IWM. Speaking of which, hmm. Why are there so much more money? Ridiculous. Calls are massively overpriced on IWM. I want to sell them so bad. Hmm. So is our range 5385 to 5600? No, not quite. Like 5450 to 5600. You wanted VIX above 16. That's how that rolls. China's PMI is important for commodities. I just don't, like, I don't think the results of it were very telling. Like, I think manufacturing PMI barely changed at all. And then non-manufacturing PMIs were just flat. Like, right at expectation. So there was, like, no surprises or anything in the data set. And the BOJ deciding to hike rates just blows anything else overnight out of water. Or out of the water. Also, EU inflation was up after their hawkish cut. And I think German import prices skyrocketed too. Awkward? Well, actually, I mean, I think better for the oats spread, right? I know the 7-year auction tightened up a little bit this morning, like the bond auction. So less risk in the like EU internal EU spreads. It's almost like prioritizing banks over economies. Maybe not great long term. No, it's not. Wait till Yellen runs out of money and we still don't have a budget. Did you really see IWM breaking 220 before JPOW? There was a chance that it could break it yesterday. But no, I mean, I kind of intended to keep these through now. I'm just not sure if I want to add to them or not. I don't know how dovish JPOW can be after the Bank of Japan decision. Aga89, welcome to Zillionaire. Thank you so much. Hit me up on the Discord. Oh,
Happy birthday, Gherkin.
That is super fucking loud. Holy shit. Hit me up on the Discord. I'll get you added after the stream, dude. Oh wait, we have a new Zillionaire song. Somewhere.
Not quite poor, not a pigeon, well rare. Enjoy your data, boss, you a real one. Buying calls, selling puts, markets mad fun. Your boss now, your pickle daddy J fresh on his lap, dorks got the VIX fatty. Calls on Excel, straight hitting sheets. Vissel's mod again, straight smashing beats. We got dance in the dumpster, pores getting jerked, pickle jar turned up, V-bop getting twerked. Stocks jump high, roller coaster thriller. Got the market moving, call me Stockzilla. Your boss now, your pickle daddy J fresh on his lap, dorks got the VIX fatty. Calls on Excel, straight
Visceral wrote it, trash.
straight smashing beats. Trend lines on fire, chart game strong. Options bandit, sing the money song. Peeping tickers, squeezing those shorts. Market gladiator, trading in a sport. In the trenches by the dip, no sweat. Stocks fly, we cash out, ain't in debt. Laser eyes staring moon's next fetch. cryptic trades, fortunes in my sketch.
It's 3 minutes long.
Boss now, your pickle daddy J fresh on his lap, dorks got the VIX fatty. Calls on Excel, straight hitting sheets. Vissel's not again, straight smashing beats.
It's a full song. Yeah. I guess that's the end of it. Are we really filling the gap to 55-55? I said we could test 55-25. 55-55 is a stretch still. But 20-25 test seems perfectly reasonable. I want to unsub and resub just to hear that masterpiece again. It's way too long. I'm here because of the thumbnail. Did you guys notice that the Philly cheesesteak is cut in half? But she's holding it up as, like, it's one piece? There's so many layers to that picture. Plus 3% on SPX today, because why not? We're not even at 2% yet. She's not at a Subway, she's having a Philly cheesesteak in Philadelphia. UCO calls are up over 100% today. I know. They're still worthless. Vic's getting shoved into a locker. How low can it go? Well, I hope only 16. After the Fed meeting, a lot lower. I had a Philly cheesesteak in Philadelphia, and boy, was it underwhelming. Yeah, they are. They are extremely underwhelming. I used to know this guy who was from Philly, and he would drive there, and he would, like, order... He would just order, like, the meat in, like, a foil wrapper, but uncooked. And then he would bring it home and cook it, and make his Philly cheesesteak back at his apartment in New York. It's like a 6-hour drive round trip. For something that he could have just bought here. That's what I think of Philadelphia people. Is it dumb to double down on my 816 SPY 530 puts right now? Or is it a nice time to get a discount? It's risky. You don't know what's going to happen at the FOMC meeting. They use ribeye? Some places do. The sandwich is inedible if they don't. The ads on mobile are making the stream borderline unlistenable. Google missed earnings. I don't know what to do. Ooh, they have new options. Let's try that. When reversal, please tell me so I buy June SPX 4000 Ps. Okay, popcorn. We've gone through this before, man. It's the end of July, man. Those are Delta plays. Those contracts don't exist anymore. 2025? Oh. Gross. Since UCO calls are profitable, would it be a good idea to sell them and buy back in for more DTE? I mean, depending on the Fed decision, it's probably a good idea to sell them before FOMC, because who the fuck knows what JPow's gonna do. I mean, nothing. He's gonna do nothing, but it's the way he does nothing that's really important. I know. Sometimes the market's dumb. It boggles my mind how many of you pay 25 to 100 a month to be here, but can't afford the $11 a month to turn off ads. I don't think it's an affordability thing, right? It's like a hostage situation. Also, ad blockers are free, but even without getting into that, you know, it's the principle, right? I would never pay for YouTube Premium. Yeah, talked about Japan a bit already. It was pretty interesting. Changes the dynamic of central bank policy, that's for sure. Can't they just release the same press release as the last few months with date changes? No, because that press release wouldn't inspire very much confidence in a rate cut, and would probably... Actually, you know what? Maybe they do go the hawkish route. Bury everybody and give banks another entry opportunity into bonds. Gonna be nasty though in the bond market if they do that. There goes all chance of becoming unshadow banned. Why? What'd you do? I have to leave soon, but DM, 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 DM. Oh, nice. Well done, Dork. You turned $150 into $150 more dollars. Yeah, I know. I drew it on the chart this week. I didn't talk smack. I just wrote a song about you losing your house. Literally every 5 minutes. I haven't finished talking about the ads from before. When the next one comes in. Okay, well, I changed the thing. Because I have like new options now. So let me know if that changes anything. Or if you're just getting even more ads. Try reloading the stream too, so the update takes effect. I had read somewhere that some CTAs started buying again yesterday, today. What's a reliable source to confirm claims like this? Thanks. Why? We didn't. That doesn't make any sense. There's no systematic trigger down here. You need to get seats like I mean, you need to get CTA reports. You're not going to get access to them. Not reliably. You might get some like Goldman Sachs interns trying to make a name for themselves on Twitter, posting them, but they shouldn't be. Speaking of the house, are you still diamond handing the Long Island Manor that you seized from the degenerate gambler, aka your best friend? He's not my best friend. I still have it, yeah, but I'm gonna try selling it before the end of summer. I have to wait for my capital gains taxes to roll off, and then I can get rid of it. What's the optimal number of shakes after number one? Anything more than three, and you're just playing with it, Doric. The legal definition of playing with it is just touching it in public. So the market went up 160 BPS because banks were more comfortable with it here. Well, no. This is just where positioning was neutral. So it's a mean reversion, right? Has the house gone up significantly since you started owning it? I don't know, like 3%? Not really. Nice. See you tomorrow, man. That's 30 full ports. It's more than that. Is oil gonna have a 5% day before the FOMC meeting? Because that would be cool as shit. Test. This is tricky. Sold calls? Ooh. Hmm. It's a bit higher confidence. Holy fucking shit. Nope. Not gonna do it. Excuse me? I'm seeing a bunch of options I don't want to buy because they're overpriced. That's not even a better deal. Thought we touched the top of the gap, bottom of the gap this week. We just did it in the reverse order of what I thought. Okay. I'm not full bull. What are you seeing on the options chain? Well, we're pushing into sold calls here a little bit. We haven't squeezed them off, but if we push above them, we're probably going to hit 50. Yeah. Maybe even 55. So we'll see if we reject here. This would be a good time to do it. Support at 25. 20. So if we fall below 20, we could fall back to 5,500. Above 30, 50, 55. Why is everyone so bullish? I don't know. Because people equate price to bullishness. We did make it above delta neutral, and we're getting close to touching gamma neutral, which is kind of bullish. Not there yet. But we're not that far away. Hey, Mr. Pickle. Peppernuts distracted me this morning. Can you go over all the important stuff over the last hour in just 20 seconds? Above 55.30, we could test 55.55. Below 55.20, we could test 5,000. Yeah, Hum's gonna get shit on. That's something people buy when they're not feeling bullish. 5,500. Sorry, yeah. I mean, maybe 5K if it keeps going, but that's down the line. Down 16K today. Why are you still holding them? Are you just doing that thing where you're like, fuck it, I've already lost so much money that I don't care if I lose more? Because you can keep losing more. Anything AMD does, Nvidia does better. I think that's the market sentiment. I'm not. I just keep getting stopped out. Why are you shorting the bull trend? Well, there's your breakdown. But seriously. It doesn't deserve to exist. You and your fucking one ES contract don't get to decide that, though. You're here to pick up the errant pube that falls off of Jamie Dimon's balls onto the floor. That's your alpha. What? I didn't stutter, Jen Jen. Yeah, that pube's worth a lot of money. It can be. Especially if you sell it while the market's hot. Did they make a Roomba for that? Character name's correct. That is algo trading. How dare you talk to us this way? Do it again. I like it. I wrote a 90s rap song for you yesterday about stealing your girlfriend. And I hate you again. Do you ever move losing legs of straddles closer to the money? Sometimes, yeah. Sometimes I'll roll them up. I mean, that's essentially what you do when you place a new straddle, right? First thing I did this morning was sell 54.95s against the puts. I'm probably going to close those. Is it time to take profits on calls? Well, we haven't fallen below 55.20, which is the bear signal. But we did reject off 30, which is nice. Need to lose 20 to see some downside. Well, at least confirm a downside move. Yeah. '20's supportive, so. Do you guys understand how to use like confirmations or signals like that? I feel like maybe people don't get it. No. So you have two options, right? Okay. So you know 55.30. Maybe this will help. 55.30 is the bull signal, right? 55.20 bear signal. So, below 55.20, range extends out to like 5,500. Above extends out to 55.55. So, and we're trading here. All right. So on this test, you could go long or short. Either one would be with a stop, right? This is kind of high risk, but you get a cheaper entry if it breaks out, right? Or breaks down rapidly. It broke down, right? A little bit, not much. So say you go short, you can hold that short, but you need to keep the stop on it. And then, if it retests 55.20, you want to move your stop into the resistance and see if it continues to break down. And these would generally be considered, anything within this channel would be considered a higher risk entry, right? Higher risk, which means tighter stop. Higher confidence entries would be once a breakout or breakdown is confirmed, right? So these would be lower risk entries, which could have a wider stop. And on these, you know, this would just be long, this would just be short, right? There's no interpretation. So if you're taking entries within the channel, you are taking on more risk for a potentially higher return. If you confirm, you're taking on less risk, but lower return. You could just use a trailing stop if you want. The chances of getting stopped out due to the spread are a lot higher if you do, though. It's hard to set stops when you're using 100% of your buying power for every play. I think it's just 10 times more important that you set stops if that's the case. How do I get lower risk, higher return? Find mispriced options. So like end of day yesterday, right? The 5 cent 54.55s. Those were low risk, high return. I'm up a whopping $95 today. I get stopped out 100x a day. I'm gonna say you're over trading. How do you know the difference between testing a level and crossing it? Well, the test is pretty obvious, right? Like the test here to the downside is 55.20. Breaking free of that level, a little less obvious. Like 55.18. Continuation after the test is generally sufficient to confirm that, you know, you're getting a continuation. But this is why you enter at the test, right? And you have a wide stop. So your stop's like back here, right? Let me zoom in more so you can see it better and get rid of this gigantic pen. So, you know, you're still entering on the 55.20 test, but you have a wider stop. Because you've taken a safer entry, you don't need as tight of a stop. And now you can, you can wait out the consolidation, you can wait out a reversal and a retest. If you want to make more money off of this move, you would confirm the breakdown, say like, you know, halfway between the two strikes. So like 55. It's usually not exactly this, but like this is pretty easy. Like 55, 17, 50. And then if it loses that, it's probably going to get a continuation down to like 55, 15, right? So on the break there, you could add and increase leverage for the remainder of the move, which is expected to be as low as 5,500, right? Or could be as low as 5,500. Now, we have more data than the average trader would be working with, right? So we know that there's some like support resistance here at like weekly delta neutral. And so that gives us a little bit of an advantage because we wouldn't want to add until below DN, right? Because we have some understanding of how the market maker is positioned. So, an add here would actually be disadvantageous or low, like higher risk than an add here. And this is why like having neutrals is really valuable. Because other people will add here, right? Increasing the value of your put option, but you haven't added, and you can, move your stop up to the point where they're adding, right? And should things reverse, you will be profitable and they will not. And this is already a trade, right? This is a profitable trade. You only need $5. You don't even need that, but it helps to get it. Now the guy who shorted back here on the test of the bull signal, right? He's up a whole lot more than someone who took the safe entry. Right? But he had to take on all of this additional risk until that move was confirmed. Yeah, that's me. And then you get stopped, right? Stop. I got stopped. Yeah, that's what the market maker did. I just bought your stop. Cool. Trying to clip that, but it only allows 60 seconds. I have no idea. Does it normally allow more than that? You can always just tag the timestamps in the comments or something. Or rewind to the start of it and create a link with the timestamp. Serious platform question. Will we be able to order Papa Murphy's ready baked pies from within the platform? No. How smart is it to buy puts shortly after the test of the high, such as 55.30, and then enjoy the downs if it goes down, or exit when the breakup to the upside happens? You're asking about this entry, I assume, right? I mean, from a profitability standpoint, this entry is way better, right? Way more profitable. This is a $15 move versus this $5 move. Wow, 7. But this is significantly higher risk. If you have more capital, then this is fine, right? And there's ways to offset that, right? You don't have to buy at the money. Like you can manage that risk. If you don't have PDT, you can you can sell the 30, buy the 15, right? And then just close the spread here. That would significantly lower the risk of that entry. You could just buy the 15, which lowers the risk of that entry. But also, if you don't get the entirety of the move, you're going to take a loss. So lower capital requirement for the buying the 55.15 instead of buying like the 55.30 on the test. But less delta on this, right? And so, reversal's gonna drop your profit faster, that kind of thing. No problem. I hope that helps people. So many Kamala Harris commercials. Does she let you give her Arabian googie? What? Thinking head and shoulders here or consolidate up? Well, we've kind of broken above a head and shoulders. We also already traced back the low, like back to support. So a failure here would be very bearish. Like if we fail at 25, that would be pretty bearish. But this is a whole nother setup and entry opportunity, right? Still the same thing, right? Below 55.20. So you would still want to confirm. What wording could JPOW use to send us to 5,600 versus 5,400? That's tricky. Honestly, if he's more hawkish, we're probably more likely to go up. It's really going to be down to like the phrasing in his presser. Like it'll be something like one word, right? It'll be, like taking modest out of modest further progress towards the committee's 2% inflation goal and just saying the committee is seeing further progress towards its 2% inflation goal, right? That's dovish enough that, it could be viewed as indicative of a rate cut. Yeah, it's stupid. If he doesn't outright cut today or hint towards a cut, a cut is going to be probably bearish, right? It's going to be reduced leverage. If he doesn't hint at a cut, though, financial conditions are going to tighten. However, dollar will go up, which will ease the spread on JPY and offer up more leverage. So probably bearish for IWM, bullish for tech. And then if he's dovish, bearish for tech, bullish for IWM. I haven't added an ad since you switched something. Okay, cool. I'll just leave it set like that then. Buffett sold like $3 billion worth of B of A. I'm perfectly hedged. IWM puts, SPX calls. Oh wait, I'm either getting rich or blowing up a port. QQQ calls would make more sense here, but I guess that works. What does JPOW need to say for Carvana to not be worth $7 trillion? Rates are going to stay high. Yeah, that'll do it. Carvana's earnings are probably going to fucking suck too. That's why all the insiders have been selling over the last quarter. What time do we find out our rates versus the presser? 2 p.m. Presser's at 2:30. So the decision is at 2 p.m. Could get crazy for tech though if Meta pulls a Microsoft tonight. I think the tech response is going to be CapEx up equals Nvidia up. So if Meta, Goog, Tesla, Microsoft, AVGO are spending, revenues are down. The market seems to be perceiving this as that money is going to Nvidia. So this is the stage of cyclicality, right? Where these begin to decline, but Nvidia goes up because the capex is flowing to them, right? Then if Nvidia's revenues go down, that's the end of the cycle. Remember, chips are cyclical. Right? You make a chip. Everyone buys chip. Nobody needs more chips. But the new model, yeah, corporations spending billions of dollars aren't going to fall for the GPU upgrade scheme. I'm confused about how we did a double reverse to hawkish bullish, dovish bearish. We have bifurcation in small mid cap and tech. Tech benefits from higher inflation, higher rates because they're cash rich. Small caps benefit from lower rates, lower inflation because they're cash poor. Right? So it's a shift in credit markets. You say that, but H200s. See, the problem with the way data centers work, though, in their upgrade cycle is that, you know, the H100 and the H200, it's just going to be when they enter the market, right? Like people entering the market along the release of this will buy the newest product. People entering the market here will buy this. These will upgrade out here. These will upgrade out here. All right. But with you know, retail GPUs, people will actually just upgrade every step of the fucking cycle. And depending on capex and how much, you know, they can afford to spend, you may get, you know, especially if economic conditions are tightening, right? You get this, buyers here upgrading out here. Buyers here, out here, so on, right? Probably about 232, 235. Crippled mule. What if they spend all their cash on something useless? That's what they're doing now, right? And you're gonna get equivalency. Right? Because all of the mega caps are giving their money to Nvidia. Nvidia is going up, but these are going down. And the weight of the declining stocks is greater than the one beneficiary. Well, I guess Nvidia slash AMD are, they're both beneficiaries, but AMD's still way too small to have a huge impact. VIX isn't below my chart, but it is right at the bottom. If you're going to buy 0DT lottos, they're all overpriced. I agree to a borrow fee if I get assigned in a cash account with cash that's been there for months for a covered call. I think that's like if you get assigned early and you have to borrow shares. I would have to see how that's worded, though. That's strange. You should just be covered. Was that a head and shoulders forming? No, we already got the head and shoulders. That was back here. This is a bounce after the neckline was tested. And it's not a very strong one. It's kind of distributing out. But again, you know, the confirm is still at 52.20. I'm feeling very educational today. I don't like it. TOS has been putting that warning on hard to borrow securities. Okay. Probably it's just like a problem with their programming. Like they're just telling people that who are selling naked, but you're not. So it probably doesn't apply to you. Kind of how like Fidelity will tell you you're selling naked calls, even though you're selling covered calls. Our August 16th Carvana 120p is so pricey. $16 out of the money for 550 because they have earnings today. You ever look at ASTS? I sold calls against it. So it sounds like for the most part, unless there's a cut, we're going up. No, 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 no. dovish enough for September is sufficient. I just assumed they could see my webcam. Who? Potential for today is to set the new trend for the next few months. Very possible. I think you think we get a decent pullback as soon as JPOW starts speaking. Depends what level we're at. Right now we have a lot of support at 220. I know we slipped it earlier, but there's still a decent amount of support there. If we're trading above 220, or especially above 55.30 by the time he starts speaking, the downside will at least be partially protected. Fidelity? Oh. Where are the 7 rate cuts that were promised back in October? Same like the 7 rate cuts promised for first half of 2025. JPOW is definitely at a point now where he's got to do something. Otherwise, no one's going to believe that the Fed is real. So prior to the election, I think he's got to take at least some kind of step. He's not going to be able to leave rates flat. But that creates problems, right? That's gonna either he does leave rates flat, right, and rates come back up again, and a ton of money is lost in the bond market and dollar rises, or he cuts and dollar drops, which that's good for those hold to maturity securities, really bad for assets valued in the dollar. Can he just hint at rate cuts and never actually cut? That's what he's been doing for a fucking year now. But if he does that here today, the yield curve is going to reinvert. That is what they want. It protects the banks. Ryan Cohn. So my IWM puts could still print. Yeah. Oil back alive for your August 2nd nearly dead calls. I got out of them today at a lovely 5-cent profit per contract. Initial reports regarding the assassination of a senior commander of the Islamic Revolutionary Guard Corps in the Syrian capital of Damascus. Didn't the US take responsibility for the strike in Iran? You said VIX might go under 16 after the meeting, so 5,700. I don't think we have a clean shot to 5,700 yet, but we could push back to like 56 right now. What are the IWM puts? Oh, they're for if Powell is hawkish. Even slightly. Should actually buy more. Hmm. Calls for tomorrow. Hmm. Any market impact from what's going on in Venezuela? A little bit of risk premium on oil, maybe. The country doesn't really have an economy, so it gives a shit. You're not new here at all, Winter. What's a scenario in which markets go down because of JPOW? Promised cuts or cuts? Can you talk about how you look at the TA setup now that we're retesting again? Does it become a repeat, or is the fact that the second test more likely big up or big reject? Well, we have a reversal, right? And this would be the breakout. Technically, this should be bullish, but it's slightly expanding, so there's a little more volatility as we're approaching the test, which isn't unusual. But, I mean, it is bearish consolidation, right? And we don't actually have a bullish... We don't have a bullish reversal yet on QQQ. Well, I mean, I guess this is actually still technically a lower high. Just slightly. So yeah, this isn't the best. Definitely not a strong reversal. I would say that the odds probably favor another breakdown. How low could we go if he says all the wrong things? Back to where we were end of day yesterday, maybe? Depends on how bad the things he says are. So push up with that yellow line means ultra bullish. No, it's not. I mean, it's not ultra bullish, but it opens up a test at 55, which is pretty decent. It's a decent move. He won't say bad things. He can't. Well, here's the problem with that. There's some things that he could say that are not good, but they're not bad. Right? Like, there's things he can say that, you know, would be considered good, but still mean market down. Hmm. Why are we up? The index mean reverted back to, like, neutral. QRA is pretty bullish. Yellen's gonna keep juicing the caboose for the next quarter. We have an FOMC meeting today, so it's pretty normal to get a mean reversion in positioning before big data events. Rate cut would be bullish for Upstart. Reduced net income, increased liquidity. So, yes. Mean reversion, but why does it have to be so mean? Ridiculous. Hmm. Hmm. Pushy, pushy. Bullish above the line, yeah. Is this confirmed? Yeah, it's a breakout. One sec. Ooh, rejection. Hmm. Yeah, oil keeps going up. What bounced off VWAP? Oh. Why QQQ calls for tomorrow? Well, if JPOW is dovish, QQQ. Let me think. So, if he's dovish, we're going to see yields fall, IWM pump, QQQ fall. If he's hawkish or doesn't cut rates today, QQQ is probably going to pump, IWM is going to fall. Yeah. I think Microsoft calls could be better. Yeah. Not there's tech earnings tonight. I don't want to play the sympathy move. If rate cut dovish, will Upstart go parabolic? Probably not. I think it's got some room up to like 32, something like that. Upstart. 20, yeah, probably like 32-ish. SPX is going to move in the direction of his decision. No, dovish is probably down. Hawkish is probably up. Inverse. IWM pump no matter what JPOW does. No, not necessarily. If JPOW does anything to push yields up, IWM's probably going to tank. Why is it inverse? Because positioning is bifurcated. It didn't. On one side of the decision, we have yields down, dollar down. On the other side of the decision, we have yields up, dollar up. Tech benefits from yields up, dollar up. Small caps, breadth, manufacturing benefits. You know, high debt sectors benefit from dollar down, yields down. Yields up if hawkish? Yeah, probably a lot. People have been piling into bonds. So if they get burned, the sell pressure is going to probably be pretty intense. We might get like a mini crash in yields like we got back in November. Or like mini crash in bonds. Or October. Well, October. Yes. Why the fuck would someone want me to sell their pillow? I don't sleep. If you get yields down, dollar down, that means recession. Yeah, probably. How hard does IWM squeeze if dovish? 230, maybe 235. Now cuts are bad. Cuts drive people into bonds and out of equities. Tech is pumped on the promise of cuts, not the realization of them. Are you seeing more or less sold calls at 55.35? Have they been adding or pulling back? I haven't really been paying attention. There weren't very many sold calls at 35 before. There still aren't very many sold calls at 35. Most of the sold calls are at like 25, or a bit at 30. Pharma impacted by the JPOW direction at all? Health technology probably is. It's considered like UNC, hum, those are considered defensive, so you would see a move into defensives if he's dovish. Would you consider this a break at 55.30? Not significant enough to flip to calls. I mean, we've broken 55.30, but we're running into resistance at 30. Well, we ran into resistance at 35. So we had a breakout, but it failed. Um, we're still consolidating in this range, which isn't exactly bearish. It doesn't even look all that distributive. So it looks like just mounting upside pressure. Mm. Mm. I don't think the consumer is doing well. Why Pepsi up? Release the meatball? Mm, yeah, we can slide back down pretty hard. It's not very steep though. We need like a push. Ooh, put entry. Maybe. That's kind of bearish. Fucking Christ. Hmm.
Look at tech being all resilient. Hmm. Looks like we're pretty much exactly where you predicted we would be on the Sunday stream. Yeah. What's this influx of moped criminals I'm hearing about in New York City? No idea. I love your charts labeled with woo. Could you do this forever for future updates? No. That's not analysis. No, I didn't say the market was going to crash on the Sunday stream. So we blew through resistance and then instantly failed it. Yep. Well, not instantly. I mean, we got like $4 and then failed. How's the googly-eyed smiley guy in the HVIV chart? Not analysis. That was a solid expression of sentiment. Do you do any CCs on your AQN position? I just saw the chain. Unless you're selling at the money with theta, it's worthless. No, I don't. It has a dividend. I mean, I have a few stocks where I'll sell covered calls that have dividends, but most of them, it's not worth it. If you have a small position, you could pull it off, maybe. I'll come for Dixie with no change today, but a signal depends on what the signal for September is. There's going to be a lot of interpretation of the Fed today. If the market doesn't feel like the Fed is signaling a rate cut in September strongly enough, and they don't just cut today, that would be seen probably as more hawkish than if they actually did something. Because so much is priced into just the anticipation, right? Tested 55.20. 55.20 would confirm the breakdown. Or we bounce off of it. Loose. Still weak. Come on, slurp us into delta neutral. It's 2K shares. I'm not going to risk it with earnings next week, but I appreciate your thoughts. No problem. Yeah, most dividend stocks are going to have pretty shitty options chains. Usually the higher the dividend, the shittier. Bastard. Delta goes negative at 55.10. Charm is slightly positive here, but falls negative below 52.20. I think we get a little bit of a pullback before the Fed meeting, maybe. Tentatively, at least. Maybe just like 13.4 or 19.4. 19.4, 55. Jay's probably gonna cut, and I don't know what is more leathery. JD Vance's Mistresses or Dork's Pork Chops. If the Fed were to cut today, do you think oil could legit pump to $83 in one day, just off of pure inflationary hype? I don't know. That would mean squeezing out the CTAs. That seems unlikely, although they may just be exiting, so it's not completely out of the realm of possibility. I wonder if CTAs would have added short when we tested 75. Maybe. Do you think JPOW cuts now? It'd be premature. But he would wrest back some control from Yellen if he did. Actually. So Yellen's gonna go with the same number of bills and fewer coupons. No, I still think he does nothing today. I still think nothing's the right move for the Fed today. Especially with Japan cutting last night. They're gonna create too much shock if they cut today. And I can't see a scenario where they want that to happen. How can cutting rates be beneficial to JPOW? He reduces the inflationary impact of the short-term debt issuance. But it would also effectively end the cycle of bank leverage. So, I don't know. I mean, the Fed's just like, this is the problem with the position the Fed has put themselves in, right? Because they're trapped. I mean, if they cut rates, they're fucked, right? They're gonna, if they raise rates, they're fucked. If they stay flat at this point, they might be fucked. What happens to IWM, QQQ, SPX if nothing? Leave rates flat? Yields probably go up. Leverage would drop. I would say IWM up, QQQ down. Index like SPX down. Might actually, neutral might actually just everything drops. Because the carry trade's tighter now. So, I mean, yeah, no change. Probably IWM down, QQQ down, SPX down. I would say dovish, IWM up, QQQ, SPX down. Hawkish, SPX, QQQ up, IWM down. It's hard to say how exactly the market's gonna perceive neutral. Yo, the economy's complicated. Yeah. maybe just it doesn't matter what happens. Short the event vol rolling off and pump the fuck out of everything. Everyone's cutting rates. Not everyone. I mean, EU cut rates. China's not really doing anything with their like 0.1 rate cuts. No one gives a shit about that. They're just making it harder to peg themselves to the dollar. But they're assuming that the dollar is going to decline, right? So they're trying to make that bet, which is risky. Sell vol. Someone's going to, but who? Right? We're below delta. We're below gamma neutral, so there's a very good chance that the volatility that gets sold is just calls, and that's not going to be bullish, right? Does gravitational attraction of black holes explain this market plumpy? Yeah, kind of. Negative gamma to the downside, positive gamma to the upside, right? And we're kind of right here. Which, if you look at that, you know, in terms of like exposure, we're kind of just boop. I guess we're a little bit above the center because that's delta neutral, right? I sold 5,000 Microsoft shares. Okay, why are you apologizing to me? I don't give a shit. Congratulations. I hope you made a bunch of money on them. I say we squeeze the carry trade from both ends all at once. Yeah, that's another facet of all of this. So, you know, a drop in total leverage. So say the Fed cuts today, that's gonna collapse the carry trade way harder than Japan's rate increase, right? And if they go that route, that's total leverage across all equities down. Even if IWM should benefit from rate cuts, it's going to still be impacted by reduced total like marginable leverage, right? What does NFP and unemployment have to be tomorrow? Because it is. They might get the Fed might have a preliminary report already. Probably do. It would also be cool if the Fed does have a preliminary unemployment report and they just come out today and they're like, we're in a recession. Do you have any exposure to Bitcoin? No, I don't like Bitcoin. Curious about it since the ETFs are approved and production is limited. Demand pretty much always be higher than production now. Long term, it should rise. Well, that's assuming that you think it has value. IWM Q up, QQQ down, QQQ up, IWM down. That should be kind of how it works. Yeah. There's a couple fringe cases where both go down. Maybe one case where both go up. I don't think we see those today. Those are... How does no rate cut result in bonds dropping? I promise a rate cut in September. There have been a few important FOMC meetings. The dot plot at the beginning of the year was super important, right? Gold isn't just a store of value, it's a dollar hedge. And gold actually has utility, Bitcoin has none. Why'd you time him out, Carl? Ridiculous. No, it didn't come with any expectation for forward rate increases. Shitty. What's the point of fake internet power if I don't abuse it? Well, at least don't abuse it arbitrarily. I think the biggest problem with Bitcoin, besides it being worthless, is that if anything adverse happens in the markets, ever, every hedge fund on the planet's going to dump it first. Because it has no value, and the only reason they buy it is to get leverage on other products, right? It's just like, it's just a dollar multiplier. So, I mean, why would you buy something that costs $66,000 a unit that could go to like 12,000 tomorrow, like that? Could go lower, potentially. Larry Fink suggested it would be a way to have an asset class uncorrelated to the market, though. Larry Fink wants you to buy his ETF. Why would you want something uncorrelated to the market? You would want something inversely correlated, not uncorrelated. Hear me out. Downside gap fill? That'd be cool. I highly doubt it. Not before the Fed meeting. There's no way they give up 5,500. Not after pumping like crazy all night. Gold isn't valuable because some fucking hick wants to keep it in their basement for the apocalypse. Gold is valuable because central banks need it to hedge the dollar. It has, you know, some uses and as a commodity, but not very many, right? It's like a good conductor, not the best conductor, but you know, it's anyway, that gold supply is recyclable anyway. What about something weird like the infamous hawkish cut? That's going really well for Europe with their inflation going up today. Well, you can only hoard wheat for so long. Yeah, it doesn't. Well, it's corrosion, very corrosion resistant. Then it turns into Huitlacoche. You mean LSD? Should I buy back my sold 5550 calls or be a greedy fuck? Carl, you are a greedy fuck. When has that ever served you well? Yeah, everything about GoEV is terrible. And I'm not really long GoEV. I have some leaps on it, but mostly I just sell CSPs on it for the 20% yield. However, I think I think there is a slight potential there for the company to just expand regardless of its management's ineptitude. I think it's a desirable investment, especially if rates are cut and inflation falls, for institutions, because they have the opportunity to capture market share in a sector of the EV market that is wildly underserved. And I think if the management wants to keep flying around in private jets and blowing shareholder money, they're going to have to eventually make vehicles. And if they start making vehicles, they will start making a lot of money. I don't know. Go look at them. Don't ask me. I'm not going to tell you what the fuck to sell. You already be the DFV of GoEV? Eh. I was already the DFV of Upstart. And BNED and Revlon and BBBY. Sometimes GME. There was a few. The $2 one seems very risky. Does it? I guess. I mean, if it's under $2, I'm selling the $2 put. Well, the bullishness on GoEV. I thought it was a shitco. It is. It is a shitco. It's also a shitco which can benefit hugely from government contracts and funding. Today's shitco, tomorrow's Nvidia. You never know. And Spurt. Yeah, I forgot about Spurt. Can you be the DFE of IWM puts? Thanks. Haven't I already done that like 5 times this week? Bored? Yeah, that's pre-FOMC meeting. These days are never fun until the second half. I appreciate you answering all our questions, even if some of us are poors. No problem. SPX is still your greatest work. I know, I love it so much. You could be the DFE of Fubo too. That'd be cool. You know, it'd be awesome if Fubo gets an injunction against Disney and Fox and beats earnings, and it goes to like $20. I know Pax has earnings tomorrow. I don't care about it. Stop, dude. AMD causes Nvidia to pump overnight, but AMD bleeding doesn't impact Nvidia. Classic bull move. Nvidia has Microsoft's money, Nvidia go up. What's the non-hyperbolic PT if both of those things happen for Fubo? Is that hyperbolic? That would be, what, 5 quarters of positive earnings, right? 6? 6th quarter consecutively positive earnings and an injunction against their biggest competitor? Or biggest potential competitor? I don't know. Pretty big double bottom on the daily. Fubo used to be like $60. What market are they targeting? Soccer, largely. Fubo's management's actually really good at getting contracts and broadcasting rights. Can we get a fucking lower low on this drop? I just want us to pull back to the market maker hedge at 55.10. And then we can bounce again. That's fine. We'll bounce back to 25 before 2 o'clock. Pelosi's back and buying more Nvidia. You mean she bought Nvidia a month ago? If you look at Pelosi's port, she just does well in bull markets, like everyone else. Paul Pelosi fucking got wrecked in 2022. And sold Nvidia at the bottom. Did the juice caboose make more juice? Oh yeah, she's drowning the system in liquidity. And increased her treasury buybacks by like fucking 100%. Which version of J-Power causes oil to MOASS? The one where we go to war with Iran? How do they happen? Gaps? There's a break in liquidity. The MM is unable to either provide liquidity at the strike or doesn't have time to provide liquidity at the strike. And you get a break in the bid ask. They don't matter. I mean, not really. Did you get enough likes yet? Probably not. If anything, gaps are a signal of a low liquidity range, right? And you're likely to trade back to that range because the market maker, as they hedge their book, has a desire to balance things out, right? Inherently, as part of the, or mechanically, as part of their hedging, right? So the fact that there's a gap does well. The fact that there's a gap doesn't really matter. Right? It's the low liquidity at that level that the gap signifies that matters. But that can occur without a gap, right? You can have a range that has really low liquidity and no gap actually occurs in that range, but you'll still return to that range regardless. And that's why the gap itself's not very important. It's really where the market maker needs to drive liquidity in their book in order to balance it, right? Like right now, the market maker is very overextended, and the market maker would very much like us to go back to like 55.10, right? And their hedging directionally will be towards that goal, right? Even though there's no gap at 55.10. Now, if bulls come in and start making a market at spot or higher than spot, then the MM's going to concede that and make the market where it needs to be made. And that's why gaps can just go completely unfilled, regardless of how big they are. There's a psychological aspect to gaps where, intraday traders and market participants who really don't understand market maker hedging or, the liquidity within the market maker's book are seeking to target that. But in that instance, the market participants are doing exactly what the market maker wants, right? Which is that they are providing a liquid market targeting where that gap is. I want QQ to pull back. Pard? Pard would be cool. I should stop bouncing on 20. What's dispersion doing? Eh, not much. Forward yield on volatility is at 3%, which isn't great, but it's still positive. Ooh. Maybe getting like a slow distribution, but we only have an hour and a half. Mhm. Is that more than your current salary? Texas has a lower cost of living, but it's Texas. You just turn both legs into spreads. You can just turn it into a condor. I switched to Fubo a few months ago because sports and it's a good service. There you go. Buying IWM August 16 puts, we get IV crush. IV is 26, while 2 days out is 40. Yeah, probably. I'd imagine anything you buy in IWM right now would get some amount of crush. That's why I haven't closed the puts despite the price of IWM rising. Because if it tanks and IV rises on the puts, they'll go up in value. I'm here for the meatball lessons. Thanks to the dropping the fire info, an educational stream. No problem, Edward Chop Hands. Thank you so much, dude. At least Texas has barbecue, which is and Tex-Mex. So two redeeming cuisines, whereas Massachusetts has 0. Massachusetts has good seafood. So does everyone else. There's so much bad food in Massachusetts. The standard for food in Massachusetts is the one of the lowest I've ever encountered in in any coastal state. You guys will eat anything. You think Dunkin' Donuts is good. It's a fucking embarrassment. I can't believe I have to share the same coastline with you people. I do value investing. I do value investing. I do dividend investing. I invest in bonds, stocks. I most of my like income generation is via index options, but not all of it. No, I won't move to Boston because the dating scene is so violent. You've always got to like fight someone's brother or uncle. I've never been slapped by more women for not insulting them. That's something I would expect an elitist New York food snob to say. I've been to every like top restaurant in Boston and they all suck. San Antonio is way more laid back than Austin. A lot more hicks too. New Englanders are angry all the time for no reason. Yeah, that's also true. Well, I mean, they have a reason, right? It's just not immediately obvious. It's because living in New England fucking sucks. I want to be a fake cowboy. Are you a real cowboy popcorn trader? Imagine bragging about winning the Revolutionary War just to call yourselves New England. New England, much like everything else the British have ever built, is kind of shit. That's why New York's so awesome. Dutch, right? Didn't you grow up in England? Yeah. New York needs more old style windmills and tulips. New York's not part of New England. Likely to break down under 55.20 before 2 o'clock. Looks like we're kind of likely to break down under 55.20 right now. My son just graduated and moved to New York. Can I list you as his emergency contact? As long as he never has an emergency. Oh. When's the record gonna heat? Gonna melt these red candles? What record heat? He's pretty responsible. We'll just have him list EC as Gherk. Let me give you my landline. My first place of employment got very upset with me that I listed my emergency contact as 911. That just seems very practical. It's hard to be autistic, isn't it, Popcorn? You do the thing that makes sense, and then people are like, I don't like that. It's ridiculous. Rism with the tism. I thought I had autism, and then I came in here and was like, maybe I don't. It's a spectrum, right? If I'm dying, call an ambulance. It seems so simple, yet elusive. I'm just dumb. Oh, Carl. Holy fuck, this is dull. Nope. I think NQ needs to bleed a little bit more. Then maybe, just maybe. Third rallies? Hmm. I don't want to wait this shit out again. Hmm. Hmm. I want to get back into my hum leaps. I wonder if we could sell back off to like 342 though. Hmm. All right. IWM puts are gonna be so nice if JPOW is a hawk. Or just accidentally too hawkish. I think they'll just short vol and pump the mag 7. I kind of do too. Seems like bulls are trying to stabilize 20. They don't want it to slip back below delta neutral because we'll push into like 55.10. If delta on the 0 DT slips negative, we could push into 5500. So like a loss of 55.20 is very risky, which we kind of saw earlier back here, but they managed to reverse it. Charm and delta turn negative right around what is it, like 55.12 right now. Actually, charm turns negative here. Charm, I think charm is actually negative here. And then delta turns negative at like, what is it? 5508. It's a failed breakout. Maybe we get some momentum off that. I'm more interested in seeing if QQQ will, or NQ will fail 19.4. If NQ fails 19.4, that opens up probably a decent sized dump. I feel like NQ is still weaker than SPX right now. No breadth to support it, right? Bought a bull spread as a hedge. It's $100 in the money, but I didn't pick entries with OI, so I can't sell. What's the bid on it? Is it really, is the spread that bad? I mean, no matter how bad things get, you can always close at the bid, right? Spread is $5. August 24.20, 24.25. 54.20, 54.25. 1 second. What's your chopped cheese sandwich? I don't think so. Hear me out. TLT straddle. Interesting. Does the BOJ rate hike really only go to 0.25 when we're at 5.5? Yes. They hiked, well, technically their rate is 0.1 to 0.25 right now. Is that a lower low? Nope. Just the same. So fucking grindy. What if the carry trade had a relative gap of like 1%, not 5.4% yield? No, what's the spread? Hey, we broke 50 to 220. You can do it, market maker. Yeah, well, else having a good day. So good, in fact. Hmm. was watching some Japanese broadcasts leading to the rate decision, and they were openly speaking about the carry and comparing it to the layman shock, as they call it. Yeah, some similarities there. Fucking Christ. What did I get stopped out at? 60. I kind of want to dump my IWM call hedge. Is there a chance it pumps more? Yeah, there's a chance it pumps a lot more. Goes. Why so flat? Nowhere to go. Sold calls to the upside. Support to the downside. Could be so bullish, Gherkin. You're making the market go up. What did I do that was bullish? Husky, not fat. I didn't eat lunch. I haven't eaten anything today. Ugh. I do kind of want a snack, though. Hmm. Fuck, this is so dull. Do you think we touch 5,500 today? We could. It's definitely open. I'll tell you, if we break 55.50, I'm going long as fuck. Are you from Indiana, McLevin? I said 55.50. But we heard 55.30. I don't think so. I didn't say that. Ooh. Fuck yes. That's so awful. Did I miss the fucking bottom on this? Maybe not. Actually, more than I want to spend. Hmm. Some volume on ES? From what? No. It's still shit. We got back above 55.60 on ES, but I don't think that's very important. There's... My inner baby. McLovin's baby store. Ugh. So just pick up a little bit of fucking bearish positioning for this. Jesus Christ. Anything to break this fucking 52.20, 53.30 stalemate. What the fuck is that? Do you think the Fed is feeling the pressure to cut? Probably, yeah. VIX doesn't affect anything. It's just a calculation. How long is the presser? Usually it goes for like an hour or so. Are we in the end game? No? I don't know. Do you have like a terminal disease? You might be. trade this. How many strangles are too many strangles? I don't know. How many do you have? What would be the short, mid, and longer term macroeconomic impacts of a cut or a hold? Short, mid, and longer term macroeconomic impacts of a cut or a hold. Well, hold doesn't really do much. Hold's going to push rates back up, right? Because it's going to lower expectations for a future cut. And it'll raise the dollar, which should probably ease the carry trade spread and help tech and short vol leverage back up. A cut would reduce available leverage in the system. It would tighten the carry trade. It would probably push people into bonds and risk off equities and push the bear steepener. Which leads me to believe that no matter the result we pump, it's possible. We have NFP tomorrow, though, so event vol's not going to dive too much after the FOMC decision. It'll dive a bit, but NFP is really important. Also, it'll depend on how much weighting JPOW gives to labor data and inflation data at this meeting, right? Because we're going to have like CPI, PPI coming up. We're going to have NFP. If the Fed is still leaning into data, then all those prints might be really impactful. Are Intel or Strangles fairly priced? Probably not. Were there earnings today? The market makers only pricing in a 3.2% move. Yeah, I guess those are fairly cheap. Like the 1 DTEs are. Implied vol's at like 50 right now. No, not really. I had a little bit of allergies earlier, but nothing now. I'm fine. I'm tired. I'm getting less than my usual 4 hours of sleep. And I got like 4.5 last night, which was now I'm like I've overslept. Is Intel tomorrow night? If Intel's tonight, they're pretty fairly priced. They're pricing in a 7% move by end of week. Go slam a 4 loco. I don't know. I'd like to remember the rest of the day. 2 p.m. data released. 2:30 JPOW speaks. Will both move the markets? Yeah. Microsoft bombed earnings, says AI, and the entire market is saved. That's not what they said. I mean, Nvidia up 500 billion in market cap. Is that what happened so far? Yeah, pretty much. What are your thoughts on Carvana earnings tonight? I feel like they might not be very good, but I still took profits on a bunch of Carvana shit yesterday. I have some puts that I'm going to carry through their earnings, but not a lot of them. I'll probably add more after, depending on the outcome. Insiders weren't dumping shares over the last quarter for no reason, though. The world's slowest fucking reversal. Hey, that was cool. Did you get some good sleep last night? No. I just need like a weekend off or something. Doing the stream and the platform stuff is burning me out. What's up, Cobra? Do you use white noise machines? My house is full of air purifiers. I don't need to. You probably aren't the best person to ask for mattress recommendations, though. I have a great mattress. It's a Cluft. Go on vacation? I don't do those. I haven't been on vacation since I was like 23. That wasn't even really a vacation. That was just an extended work weekend. Days off are for pores. Yeah, exactly. Is Trash slacking on his relaxation methods for you? No, no. It's no one's fault but my own. Let's do a weekend in Vegas and put all of our crash gains on black. If I did that, I'd end up like killed in the basement of a casino. Trying to get him to come to bed early, but he's busy brigading super stunk. what could come out of the rate decision that would be considered bearish? They don't hint strongly enough at a September cut, or they cut today. What's Gamma Max on Intel? I don't know. Give me a second. $38.13. It's not in a very bullish spot. God, Intel looks like shit. Oh, did we fail 20? Look at us go. The dream's alive. But hold on, we gotta fail this shit too. Oh, you piece of shit. Fuck you. The mean reversion on these puts was pretty good though. Just reject at 20. That's all you gotta do. It's so easy. Don't break above 20 again. Fuck you. Oh. His dip hours are extraordinary. Just let it fucking mean revert before the FOMC meeting. That's not that hard. Where's the hedge? VIX isn't going to pick up substantially unless we drop below 5,500 again. It's like 55.08. Oh, DM. Nice. I've hedged off my shitty IWM puts. Perfect. I didn't get stopped out. This is positive delta. Woo! Bounce time. Poll for Fed rate decision. Yeah, sure, why not? Is 1.5 half a hike? Yeah. With half a cut. And cuts. There's no hikes. I wonder if his tie's purple. Hold my IWM puts up 70% or hold for FOMC, because that's what I intended. You can always put a stop on them if you're up. I've been waiting for Gert to come back on to stream and speak since he was off camera. That was for like 2 seconds. I've been on mute the whole time. Well done. JPEG won't release until he's in Jackson's hole. That's true, yeah. Can you bet on his tie color in DraftKings? Probably. Bulls need to pump this shit in the next 23 minutes. Oh god, am I double long? Oh no, that's not what I wanted. Whoops. What, we dropped to the exact price I said we would. It just took fucking 2 hours. I want to get today's stream card made into a t-shirt. I want to put it on a hot pink t-shirt. I'm going to wear it everywhere. Yes. We don't want you to die of a heart attack. Why would I die of a heart attack? I'd just die of whatever those like Korean kids die of when they sit in chairs for too long. Pulmonary edema or something like that. Thanks, Trash. It's a halfway decent gamble buying 500 calls on Fubo, $3, 920 calls to hold through the lawsuit decision. I already have $2 calls. I mean, pulmonary embolism? Or maybe it's, yeah, embolism. But no, I thought it was edema when they get like too much fluid. Is it not that? Pulmonary embolisms when you get a burst blood vessel. Blood clot in your lung. I don't know which one they die of. Hold on. Gaming cafe. I don't know. Did I get stopped out? Fucker. $5,500. Interesting. Delta neutral. You dirty bitch. Oh, they're so pricey. Mm. It's not bearish. I mean, we're still in the neutral range. It's a little less bullish. How's the market looking? Well, it went up and then it went down back to where it started going up. Does bullish or bearish really matter 15 minutes before the FOMC? No. Yeah, I'll stream JPOW. He doesn't come on until 2:30. I realized losses on my August puts. No, you were supposed to make money on them yesterday. God damn it, Jen Jen. What did I tell you about scaling? You rip your shirt off if Powell says hawkish things. I don't really care what Powell says. I think I'm pretty much fine for either outcome. What happens if we lose 5,500? Not much. 5390. Aren't bulls pumping? Well, we're below delta neutral. That's a little hard. They're trying. Currency spreads. Also, all the banks have their money in fucking 3 and 6 month bills. Lower interest rate doesn't benefit them very much. The rest of their shits just hold to maturity losses, which reduce a little bit, but I mean, it doesn't get rid of them. They can't mark shit to market. Not unless not unless rates go down to like 1%. It's not bullish as fuck. We're still below gamma neutral. We're not even really very much above weekly delta neutral. It's just a mean reversion. It's just crazy because we dropped from the high yesterday, like 300 basis points. Well, NQ did. And then bounced back 200 today. But that's still fucking flat, right? You just zoom out a little. This is like all our trading, right? If you zoom out a little more, it's not like this looks great or anything. We do have a new bear flag. That doesn't matter anymore. That might not matter either, because it could just be a double bottom. If J-Pow raised rates, the 10-year would probably snap to 4.5%. Can the FOMC just cut like 0.1 and say, there, we did it? Not 0.01, but they could cut 0.1. I could see that happening. That's why I put it as an option. That's the bitchiest move of all. That might actually cause the market just to sell off. Because everyone's gonna be so pissed. Don't you lose vol value? Maybe. Not much. NFP's tomorrow morning, so it's not like event vol is gonna trim very much by tomorrow. Oh. The cuckiest move always wins. Yeah. I know you're looking at the futures chart. What's wrong with looking? It's the same shit. I really want him to just not be dovish enough, so QQQ rockets, and no one knows what to do with the shitty fucking IWM stocks they bought. Then we can pump up, double top the high, and crash in September. That'd be perfect. Yes, my port benefits the most from that scenario. Skip the double top. Crash in August. Maybe if they cut today. Vega puts? If VIX 3-month goes under 14 again, I will. More votes than likes. Yeah. Fixie to 100, please. That'd be cool. My yen futures are up, which is awesome. DN on SPX? It's right there where the blue line is. This bounce was a little more impressive since they did it from under DN. Yeah, but it's also really likely to fall back to DN. Alright. Thank you. IWM. We ready? Decision in 3. Two. Oh, where's our statement? There goes VIX. We're gonna do that anyway. Aha. Recent indicators suggest that economic activity has continued to expand at a solid pace. Job gains have moderated, and the unemployment rate has moved up but remains low. Inflation has eased over the past year but remains somewhat elevated. In recent months, there's been some further progress towards the committee's 2% inflation objective. There's that change, not modest, further. The committee seeks to achieve maximum employment and inflation at the rate of 2% over the longer run. The committee judges that risks to achieving its employment and inflation goals continue to move into better balance. The economic outlook is uncertain, and the committee is attentive to the risks of both sides of its dual mandate. In support of its goals, the committee decided to maintain the target range for federal funds at 5.25 to 5.5. And considering any adjustment to the target range for the federal funds rate, the committee will carefully assess incoming data, the evolving outlook, and the balance of risks. The committee does not expect it will be appropriate to reduce the target range until it has gained greater confidence that inflation is moving sustainably towards 2%, data reliant. The committee is still strongly committed to returning inflation to its 2% objective. The committee prepared to adjust stance on monetary policy is appropriate if risks emerge that could impede the attainment of the committee's goals. The committee's assessment will take into account blah blah blah. Who gives a shit? No one cares. All right, there you go. So data dependent but reduced risk of inflation. They changed two parts of the structure there. Well, they left the data dependent part, but they changed the balance of balance of the dual mandate. So yeah, I guess we're gonna have to wait for the we probably had to wait for the presser anyway. I think we're gonna have to definitely wait for it now. Can you get some food? Yeah, it's probably a good idea. I'll be back in a minute. Yeah. I'm gonna grab some food and I'll be back for the FOMC thing. Scared me like a ghost. You're welcome. IWM holding up like a champ. Yeah, for now. But I think the market's already starting to move towards its expectations. It's a long way up. All right.
But your silence digs a grave. Jerome Powell, where's the justice? Our homes we couldn't save. In a small town by the railway, I pour my coffee thick and black. Prices rising with the sun, each day it's harder looking back. Jerome Powell, you're no hero, not the man we hoped you'd be. You're just a shadow of Volcker, burns in our memory. I see the shuttered storefronts, places my granddaddy built. Folks are pinching pennies, dreams erode under the silt. You promised us salvation, but your silence digs a grave. Jerome Powell, where's the justice? Our homes we couldn't save. Jerome Powell blues, it's the path you chose to take. We're aching from inflation while you gamble on our stakes. Oh, you'll never be a Volcker, you'll always be a shade. Jerome Powell blues, in the mess you made. Jerome Powell blues, in the mess you made. Families gather round the table, thinly spread to make ends meet. Mama's crying in the kitchen, there's no shoes for little feet. You could have changed the story, put a stop to all this pain. Jerome Powell, your inaction, it cuts deeper than the rain. I remember when it all started, promises of skies so blue. Now we're walking in the shadows, wondering what you're gonna do. Every speech you mumble just leaves us in despair. Jerome Powell, we are waiting, but it seems you don't care. The echoes of your silence scream louder than your words. We're drowning in this struggle while your hope flies like the birds. You could have been our savior, but now we wear the chains. Jerome Powell, just a caution of a leader who refrains. Path you chose to take. We're aching from inflation while you gamble on our stakes. Oh, you'll never be a Volcker, you'll always be a shade. Jerome Powell blues, in the mess you made. Jerome Powell blues, it's the path you chose to take. We're aching from inflation while you gamble on our stakes. Oh, you'll never be a vulgar, you'll always be a shade. Jerome Powell blues in the mess you made. Families gather around the table, thinly spread to make ends meet. Mama's crying in the kitchen, there's no shoes for little feet. You could have changed the story, put a stop to all this pain. Jerome Powell, your inaction, it cuts deeper than the rain.
This dude, I don't even know what it's saying there. My boss just called me gay. You do spend all day looking at a dude. Do you have a headphone stand recommendation? I just chuck them on the floor. Those little things that hang off the wall probably work, though. Monetize the pickle jar only music channel. Why are you sad? No shoes for little feet? Is that a China reference? I don't know. I think I think that one like guy from Wall Street Journal who looks like a cunt with the shaggy hair is gonna be like, if this progress on inflation isn't sufficient, what's your target? How do you know when you've made enough progress? Yeah, Nick. Fuck that guy. He's always got the wrong position. Why can't any of the journalists just say what needs to be said? Why are you dicking us around for 2 years while you do nothing? No, he's never bearish. The bearish guy's the old dude. Oh, it's fucking go time. Powell enters from stage right. Purple tie. Who's she?
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. Our economy has made considerable progress toward both goals over the past 2 years. The labor market has come into better balance, and the unemployment rate remains low. Inflation has eased substantially from a peak of 7% to 2.5%. We are strongly committed to returning inflation to our 2% goal in support of a strong economy that benefits everyone. Today, the FOMC decided to leave our policy interest rate unchanged and to continue to reduce our securities holdings. We are maintaining our restrictive stance of monetary policy in order to keep demand in line with supply and reduce inflationary pressures. We are attentive to risks on both sides of our dual mandate, and I will have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has continued to expand at a solid pace. GDP growth moderated to 2.1% in the first half of the year, down from 3.1% last year. Private domestic final purchases, or PDFP, which excludes inventory investment, government spending, and net exports, and usually sends a clearer signal of underlying demand, grew at a 2.6% pace over that same period, the first half. Growth of consumer spending has slowed from last year's robust pace, but remains solid. Investment in equipment and intangibles has picked up from its anemic pace last year. In the housing sector, investment stalled in the second quarter after a strong rise in the first. Improving supply conditions have supported resilient demand and the strong performance of the U.S. economy over the past year. In the labor market, supply and demand conditions have come into better balance. Payroll job gains averaged 177,000 jobs per month in the second quarter, a solid pace, but below that seen in the first quarter. The unemployment rate has moved up, but remains low at 4.1%. Strong job creation over the past couple of years has been accompanied by an increase in the supply of workers, reflecting increases in participation among individuals aged 25 to 54 years, and a strong pace of immigration. Nominal wage growth has eased over the past year, and the jobs to workers gap has narrowed. Overall, a broad set of indicators suggest that conditions in the labor market have returned to about where they stood on the eve of the pandemic, strong but not overheated. Inflation has eased notably over the past 2 years, but remains somewhat above our longer-run goal of 2%. Total PCE prices rose 2.5% over the 12 months ending in June. Excluding the volatile food and energy categories, core PCE prices rose 2.6%. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households and businesses and forecasters, as well as measures from financial markets. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. In support of these goals, the committee decided at today's meeting to maintain the target range for the federal funds rate at 5.25% to 5.5%, and to continue reducing our securities holdings. As the labor market has cooled and inflation has declined, the risks to achieving our employment and inflation goals continue to move into better balance. Indeed, we're attentive to the risks to both sides of our dual mandate. We have stated that we do not expect it will be appropriate to reduce the target range for the federal funds rate until we have gained greater confidence that inflation is moving sustainably toward 2%. The second quarter's inflation readings have added to our confidence, and more good data would further strengthen that confidence. We will continue to make our decisions meeting by meeting. We know that reducing policy restraint too soon or too much could result in a reversal of the progress we have seen on inflation. At the same time, reducing policy restraint too late or too little could unduly weaken economic activity and employment. In considering any adjustments to the target range for the federal funds rate, the committee will carefully assess incoming data, the evolving outlook, and the balance of risks. As the economy evolves, monetary policy will adjust in order to best promote our maximum employment and price stability goals. If the economy remains solid and inflation persists, we can maintain the current target range for the federal funds rate as long as appropriate. If the labor market were to weaken unexpectedly or inflation were to fall more quickly than anticipated, we are prepared to respond. Policy is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate. The Fed has been assigned two goals for monetary policy: maximum employment and stable prices. We remain committed to bringing inflation back down to our 2% goal and to keeping longer-term inflation expectations well anchored. Restoring price stability is essential to achieving maximum employment and stable prices over the longer run. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
Gina. Gina Smilik from the New York Times. Thanks for taking our questions. Markets pretty much entirely expect a rate cut in September at this stage. I wonder if you think that's a reasonable expectation, and if so, why not just make the move today?
Thank you. So on September, let me say this. We have made no decisions about future meetings, and that includes the September meeting. The broad sense of the committee is that the economy is moving closer to the point at which it will be appropriate to reduce our policy rate. In that, we will be data dependent, but not data point dependent. So it will not be a question of responding specifically to one or two data releases. The question will be whether the totality of the data, the evolving outlook, and the balance of risks are consistent with rising confidence on inflation and maintaining a solid labor market. If that test is met, a reduction in our policy rate could be on the table as soon as the next meeting in September. So you asked why not today, and I would just say, again, that the broad sense of the committee is that we're getting closer to the point at which it will be appropriate to reduce our policy rate, but that we're not quite at that point yet.
Howard.
So just to follow up on that a bit, if inflation behaves as you expect between now and September, would you regard a cut in September as sort of the baseline scenario right now?
So I guess I would think about it this way. I'll give an example of cases in which it would be appropriate to cut and maybe that it wouldn't be appropriate to cut. So if we were to see, for example, inflation moving down quickly or more or less in line with expectations, growth remains, let's say, reasonably strong, and the labor market remains, consistent with its current condition, then I would think that a rate cut could be on the table at the September meeting. If inflation were to prove, stickier and we were to see higher readings from inflation, disappointing readings, we would weigh that along with the other things. I think it's going to be not just any one thing. It's going to be the inflation data. It's going to be the employment data. It's going to be the balance of risks as we see it. It's going to be the totality of all of that that help us make this decision.
And just to follow up on that, specifically, in what ways right now, given all you've seen over the last few months in particular on shelter, on services, et cetera, in what ways are you not confident right now that inflation is on the way back to 2%?
I think it's just a question of seeing more good data. We have seen the last couple of readings have certainly added to confidence, and we've seen progress across all three categories of core PCE inflation. That's goods, non-housing services, and housing services. So it's really just, we had a quarter of poor inflation data at the beginning of the year. Then we saw some more good inflation data. We had 7 months at the end of last year. We just want to see more and gain confidence. And as I said, we did gain confidence, and more good data would cause us to gain more confidence.
Colby.
Thank you. Colby Smith with the Financial Times. The March SEP pointed to 3 cuts in 2024 with core inflation at 2.6% and the unemployment rate at 4%. Since we're now at that level in terms of inflation and already beyond what was projected for the labor market, I'm just wondering if that rate path is back to being the best guidepost for policy rather than, let's say, the shallower one laid out in the June SEP.
So I would just say, really the path ahead is going to depend on the way the economy evolves. And I can't really give you any better forward guidance on it than that. We didn't, of course, do an SEP at this meeting. We will do another one at the September meeting. I would just say I can imagine a scenario in which there would be everywhere from 0 cuts to several cuts, depending on the way the economy evolves. And I wouldn't want to lay out a baseline path for you there today. I've said what I can say about September and about today, though.
Nick Timmeros of the Wall Street Journal. Chair Powell, you've said before that you wouldn't wait until inflation got to 2% to cut rates because of how inflation has lagged. Does that apply for the labor market, too? If the labor market is back in equilibrium, why is restrictive policy and potentially very restrictive policy, given the high real funds rate, warranted right now?
So this is the very reason that we're thinking about that we've said in our statement that we're going back to looking at both mandates and that we think the risks are coming back into balance. We think what the data broadly show in the labor market is an ongoing gradual normalization of labor market conditions, and that's what we want to see.
He's not young
trash. A couple of years, and a move really from overheated conditions to more normal conditions. We are watching the labor market conditions quite closely, and that's what we're seeing. If we start to see something that looks to be more than that, then we're well positioned to respond. That's part of what we're thinking.
And when you talk about seeing something that's more than whatever softness or slowdown you expect, in the past you've said that stronger growth wouldn't override better news on inflation. I wonder how that cuts the other way. If you're seeing more softness in the labor market than what you would expect, does that change the calculus on what you're looking for out of the inflation numbers to recalibrate policy?
So we have growth isn't one of our three. We have 2 mandates, as you know. The labor market, maximum employment is one, and stable prices is another. So we weigh those 2 things equally under the law. When we were far away from our inflation mandate, we had to focus on that. Now we're back to a closer to even focus. So we'll be looking at labor market conditions and asking whether we're getting what we're seeing. And as I said, we're prepared to respond if we see it that it's not what we wanted to see, which was a gradual normalization of
talking
conditions.
more circles till QQQ
moves.
moves. You got
one
this.
statistic, although of course the unemployment rate is generally thought to be a good single statistic, but we'd be looking at wages, we'd be looking at participation, we'd be looking at all the things, surveys, quits, hires, all of those things to determine the overall status of the labor market. But we're looking at it now. I would say again, I think you're back to conditions that are close to 2019 conditions, and that was not an inflationary economy. Broadly similar labor markets then. I think core inflation was actually running below 2%. So I don't now think of the labor market in its current state as a likely source of significant inflationary pressures. So I would not like to see material further cooling in the labor market, and that's part of what's behind our thinking. The other part, of course, is that we have made real progress on inflation, and we've got growing confidence there that we are not quite there yet.
Could this have 5580?
More
Get it
confident
5600.
that we're on a sustainable path down to 2%. So those 2 things are working together, and we're factoring those both into our policy.
Chris.
Chris Rugaber, Associated Press. You mentioned not wanting to see any further cooling in the job market. Why not, or would you consider preemptive cuts to prevent if you saw risks of an unexpected cooling? Is that something you would cut ahead of time for?
So I wouldn't say I wouldn't want to see any other cooling. It would be more of a material difference. If we'd be looking at this, and if we see something that looks like a more significant downturn,
why not?
That would be something that we would have the intention of responding to.
It's like 2.66% from spot.
I don't think of it that way. I think of it as, we're actually in a good place here. We're balancing these two risks of go too soon and you undermine progress on inflation, wait too long or don't go fast enough, and you put at risk the
They're for
recovery.
tomorrow, too.
And so we have to balance those two things. That's the nature of having two mandates, and I think this is how we balance them. It's a rough balance, but it does feel like, again, the labor market feels like it's in a place where it's just a process of ongoing normalization. 4.1% unemployment is still historically low. And we'll just have to see what the data show us.
And just to follow quickly, wanted to see what you thought of the recent JOLTS report, which did show gross hiring has come down even below 2019 levels. Layoffs remain low, so it painted a picture of a very static labor market. Is that sustainable in your view, or something that is worrying? Thank you.
So I think all of the data points continue to point to kind of the direction we would want to see. So that was taken as there was a decline in job openings. That was good. Today's ECI reading was a little softer than expected, so that's a good reading. It shows that wage increases are still at a strong level, but that level continues to come down to more sustainable levels over time. That's exactly the pattern that we want to be seeing. So I think the data we've been seeing in the labor market are broadly consistent with that normalization process. Again, we're closely monitoring to see whether it starts to show signs that it's more than that.
Steve.
Steve Leisman, CNBC. Mr. Chairman, back in March, you talked about cutting rates as a process, and in June, you talked about the idea that, well, one rate cut wouldn't do anything. So I wonder if you can sort of follow up on Colby's question. Talk about, are you weighing the economy right now in terms of its ability to withstand multiple rate cuts? Talk us through the process that you're thinking, or is it just one rate cut? Or are you in the process now thinking that rates need to be normalized here? Thank you.
Yeah, I can't really say that, honestly. We've seen, significant movement in the labor market.
I love that guy.
And, we're very mindful of this question of is it just normalization or is it more? We think it's just more normalization, but we want to be in a position to support the labor market. At the same time, we're seeing progress on inflation. So, we actually got to this, we raised rates a year ago at the July meeting. And if you look at the situation in the economy a year ago, inflation was over 4%.
Listening from the top ropes.
We made a lot of progress, and the labor
God,
market
we're nerds.
I think unemployment was in the mid threes. So it's a different economy, and I think it's time. It's coming to be time to adjust that so that we support this continued process. The thing we're trying to do is
keeps over-explaining
that we have
everything.
We've had this really significant decline in inflation, and unemployment has remained low. And this is a really unusual and historically unusual and such a welcome outcome for the people we serve. What we're thinking about all the time is how do we keep this going? And this is part of that. We think we don't need to be 100% focused on inflation because of the progress we've made. 12-month headline at 2.5, core at 2.6. It's way down from where it was. The job is not done on inflation, but nonetheless, we can afford to begin to dial back the restriction in our policy rate. And I think we're just as part of a process. In terms of what that looks like, I think most you would think in a base case that policy rates would move down from here, but I don't want to try to give specific forward guidance about when that might be, because the pace at which it might happen, because I think that's really going to depend on the economy, and that's highly uncertain.
Rachel. Hi, Chair Powell, Rachel Siegel from the Washington Post. Thanks for taking our questions. On inflation, do the past few months of good reports look like what we saw last year, where you really had a lot of momentum with a few bumps in between? Would you characterize that kind of momentum as back on track at this point in the year?
Actually, what we're seeing now is a little better than what we saw last year. Last year,
as
we pointed out later
Say
in the
more
year,
of that.
a whole lot of the progress we saw last year was from goods prices, which were going down at an unsustainable rate, disinflating at an unsustainable rate. This is a broader disinflation. This has goods prices coming down, but we're also now seeing progress in the other two big categories, non-housing services and housing services. So, so the thing is, you got 1 quarter of that. We had 7 months of low inflation. You got 1 quarter of this. I would say the quality of this is higher, and it's good, but so far it's only a quarter. So I think we need to see more to know that we're, to have more confidence that we're on a good path down to 2%. But as I mentioned, our confidence is growing because we've been getting good data. And things like the ECI report, and frankly, the softening in the labor market conditions, give you more confidence that the economy's not overheating. It doesn't look like an overheating economy. And it looks like an economy that's normalizing.
Okay. And if we were to think about the first couple of months of the year, is there any sense now that they were these blips that could have actually allowed for earlier rate cuts, as were some of the projections going into 2024?
So the thing about, if what it is seasonality, and it could just be, it's very, very hard to do appropriate seasonal adjustments. If that's what it is, then that actually implies that other months we're reporting too low inflation. If you smooth it out, it's a zero-sum game. And that's why we look at 12 months. We look at 12 months because that takes all that out, all those effects out. 12-month now is 2.5% headline, 2.6% core. This is so much better than where we were even a year ago. It's a lot better. Now, the job is not done. I want to stress that, and we're committed to getting inflation sustainably under 2%, but we need to take note of that progress, and we need to weigh the risks to the labor market and the risks to our inflation target now more equally than we did a year ago.
Michael McKee from Bloomberg Radio and Television. I'd like to ask you about the balance of risks as the American people see it. At this point, is the risk greater to leave interest rates where they are, given the damage that higher interest rates do to the economy in slowing demand and raising prices, or is it more important for the American people that you keep rates where they are to bring inflation down?
I think that we've been given an assignment by Congress. This is how we serve the American people, is by achieving maximum employment and price stability, right? And so in our, quasi-constitutional document, the Statement on Longer-Run Goals and Monetary Policy Strategy, we look at the two goals, and if one of them is farther away than the other, the two variables, inflation and employment, if one is farther away from its goal than the other, then you concentrate on the one that's farther away, and you take account of the time to reach the goal. So for the last couple of years, the best service we could do to the American people was to focus on inflation. But as inflation has come down, and I think the upside risks to inflation have decreased as the labor market has cooled off, and labor market has softened, probably the inflation is probably a little farther from its target than is the employment, but I think the downside risks to the employment mandate are real now. So we have to weigh all that. And if you think about where that takes us, is we have a restrictive policy rate. It's clearly restrictive. It's been the rate we've had in place for a full year. And the time is coming, as other central banks around the world are facing the same question, the time is coming at which it will begin to be appropriate to dial back that level of restrictions so that we may address both mandates.
Well, you have event risk, basically, with the jobs report on Friday and another one before you meet again. Are you certain that you won't fall behind the curve and lead to unnecessary unemployment?
Except it hasn't come down.
You wait.
They just keep adjusting and removing things from the formula.
Certainty is not a word that we have in our business.
Yeah.
So we get a lot of data between now and September, and
but that brings it down, right?
Data read or even two. It's going to be the totality of the data, all of the data, and not just and then how is that affecting the outlook and how is it affecting the balance of risks? That's going to be the assessment that we do. Of course, we'll all look carefully at the employment report, but so much other data coming in, and so much happening between now and the September meeting, and we'll make a judgment.
Edward. Thank you, Mr. Chairman. Edward Lawrence of Fox Business. I do want to dig deeper on what Michael and what Nick were asking. There's a shift in the statement to balance between the focus between inflation and jobs. Looking at the job sides, we've seen wage data show sort of an abrupt slowing. We're hearing on earnings calls from companies like Intel abrupt layoffs. In the jobs report from the BLS, government jobs has been a leading creator. Could the government jobs as a sector hiring mask underlying weakness in the jobs report?
Well, we'll look at everything. We've seen some tendency to have a narrowing base of job creation in some months going back, but then we've had some months where job creation was broader, and also the headline number of jobs has come down. So but you look at the whole
55-50 is
thing, and,
important.
I think you
And
do
then
look at private demand,
55-75
extra carefully. To your point about government. So
that's
we'll
where all the
be
put
looking at
delta
all
is.
those things.
So as a follow then, so could the Fed then be behind the curve? Because you said some of the reports, last meeting, you said the reports could be noisy or overstated. Was there a discussion of what kind of discussion was there for a cut today? And could the Fed be behind the curve?
Yeah, so look, the objective is to balance the two risks, right? It's the risk of going too soon and the risk of going too late. We've been, we had 7 months of good inflation data at the end of last year. We said we wanted to see more. We said that we pointed out that too much of this was coming from goods, and sure enough, the first quarter wasn't great inflation data. Now we've got another quarter.
Any
a quarter
support up here?
that is good.
55-50.
And we're balancing the risk of going too soon against the risk of going too late. That's what we're doing. There's no guarantee in this. It's a very difficult judgment call, but this is how we're making it. But in terms of today, your question about today,
above 55-50, we start to squeeze out the zero DTE short calls, or at least what's left of them.
This issue today. The overall sense of the committee, as I mentioned, is that we're getting closer to the point at which it'll be appropriate to begin to dial back restriction, but we're not quite at that point yet. We want to see more good data. The decision was unanimous. All 19 participants supported it. But there was a real discussion back and forth of what the case would be for moving at this meeting. A strong majority supported not moving at this meeting. That was the strong sense of the committee. But it's a conversation that we had today, certainly.
Courtney.
Courtney Brown 75 is probably the upside resistance here.
When the Fed was raising rates, there was a lot of conversation about long and variable lags. I wonder if that applies on the way down too. How are you and the committee thinking about that?
Yes, it does. And I think the lags have kind of showed up here in the last 6 months, by the way. You really do now see the restriction, whereas, even a few months ago, people were questioning how restrictive policy was. Look at the labor market now. You can see, and look at rate-sensitive, interest-sensitive spending. You really do see now that policy is restrictive. I wouldn't say it's extremely restrictive, but it's certainly effectively restrictive. Yes, the lag should be on the way down.
35?
It should take some time.
Sold calls, but way outweighed by sold puts.
And that affects economic activity, hiring, and that kind of thing, ultimately inflation.
Yeah,
it's
like
not
35-40.
Although it's faster than it used to be because markets move now in anticipation
30,
of our moves.
35.
So are you worried then that if
But those are
monetary
already
policy
in the
acts
money
with long and
now.
variable lags, even when you're lowering interest rates, it might be too late for the Fed to help stave off any kind of slowdown in the labor market or broader economy?
Yeah, we have to worry about that. Just to make it clear, it's a very difficult, challenging judgment, and we don't want to go too soon. We don't want to go too late. But this is how we've made that judgment. I feel good about where we are. We're certainly very well positioned to respond to weakness with the policy rate at 5.3%. We certainly have a lot of room to respond if we were to see weakness. That's not what we're seeing, though. What we're seeing, look at the first half growth numbers. Look at PDFP at 2.6% for the first half. It's not signaling a weak economy. It's also not signaling an overheating economy. Labor market, admittedly, the unemployment rate has moved up 0.7, and we're seeing a normalization there. But wage increases are still at a high level. Unemployment is still at a low level. Layoffs are very low. Initial claims have moved up, but they're pretty stable, and they're historically not high at all. So the total scope of the data suggests a normalizing labor market. And again, we are carefully watching to see that continues to be the case.
Victoria.
Hi, Victoria Guido with Politico. On the labor market, I was wondering, how worried are you all about unemployment rising to the point where it triggers the SOM rule? And would that potentially affect how quickly you cut rates?
So I would just say that the question really is
you didn't have that in your notes?
Are we worried about a sharper downturn in the labor market? So, and the answer is we're watching really carefully for that. We're aware of that rule, which is really I would call it a statistical thing that has happened through history. A statistical regularity is what I'd call it. It's not like an economic rule where it's telling you something must happen.
No,
So,
it's telling you something
again,
did
what
happen.
do we see? What are our eyes telling us? We look at all the things we're seeing, and what it looks like is a normalizing labor market. Again, job creation at a pretty decent level.
Wildly
wages moving
unprepared
up
for the SOM
at a
rule.
strong level, but coming down gradually. Job vacancies have come down, but they're still high by historical standards. So, again, I've been through some of the data already, but what we think we're seeing is a normalizing labor market, and we're watching carefully to see if it turns out to be more. If it starts to show signs that it's more than that, then we're well positioned to respond.
Is there a reason to think that the labor market might behave differently this time than it has historically?
I think, history doesn't repeat itself. It rhymes. I think that statement is very true about the economy. You never assume it's going to be just the same. An example would be, is there a trend increase in the level of vacancies? There are many, many examples, so it's never exactly the same. Also, let's remember that this pandemic era has been one in which so many, apparent rules have been flouted, like the inverted yield curve, for starters. So many pieces of received wisdom just haven't worked, and it's because the situation really is unusual or unique in that so much of this inflation came from the shutdown in the economy and the resulting supply problems in the face of admittedly very strong demand. So the whole situation is not the same as many of the other prior inflation or downturns that we've seen, or business cycles that we've seen. So we're having to learn, we're having to, to be very careful about the judgments that we make, I would say. So we don't assume that these regularities will just repeat themselves automatically.
Amara. Thank you, Chair Powell. Amara Mokwe with Bloomberg. There seems to be quite a difference between what the anecdotal data are telling us, such as the very recent downbeat beige book, and the hard data. Do you take those anecdotes seriously? That is, that the economy and labor market are cooling much more rapidly than what's shown in the data?
So I do take that seriously, and the beige book is great. What's even greater is hearing the Reserve Bank presidents come in and talk about their conversations with businesses and business leaders and workers and people in the non-profit sector in their districts. But I'll tell you, it's a pretty, the picture is not one of a slowing or, a really bad economy. It's one of, there are spots of weakness, and there are regions where growth is stronger than other regions. But overall, it's, again, look at the aggregate data. Aggregate data is, particularly PDFP, private domestic final purchases, is 2.6%, and that's a good indicator of private demand. So we listen to all of that, and it does. I think it's important to listen to anecdotal data and not just look at the aggregate data. Especially, it's very hard. GDP data can be volatile quarter to quarter, so it's just hard to measure economic activity. There are it's just difficult to do. So I look at both. But I wouldn't say that the anecdotal data is uniformly downbeat. It's more mixed.
Thank you. Jolene Kent with CBS News. Chair Powell, thanks for taking our questions today. You have consistently said that the Fed does not consider politics in making decisions. With a possible September rate cut on the table, it would be less than 2 months before the election, and former President Trump reportedly said that cutting rates so close to the election is something the central bank knows they shouldn't be doing. What's your response, and do you believe it's possible to really remain apolitical with a September rate cut?
I absolutely do, and I think it's, first of all, we haven't made any decisions. I would say it this way. Haven't made any decision about any future meeting. I don't know what the data will reveal or how that will affect the appropriate path of our policy. I really don't know. I do know how we will make that assessment. That's what I do know. So if you take a step back, the current situation, again, is inflation has come down much closer to our goal, and that's happened while unemployment has remained low. We're very tightly focused on using our tools to try to foster that state of affairs continuing. That's at each of our meetings and all of our decisions, our focus is strictly on that and really on nothing else, doing our part, whatever that part may be. We're using our best thinking. We're doing our best to understand the economy. We follow academics. We follow the many commentators who bless us with their commentary. But we don't change anything in our approach to address other factors like the political calendar. Congress has, we believe, ordered us to conduct our business in a non-political way at all times, not just some of the time. I'll say this too. We never use our tools to support or oppose a political party, a politician, or any political outcome. The bottom line is, if we do our very best to do our part and we stick to our part, that will benefit all Americans. If we get it right, the economy will be stronger, we'll have price stability, people will find jobs, wages will rise in real terms, everyone will benefit. So that's what we believe, and that's how we will always act. This is my 4th presidential election at the Fed. I can tell you this is how we think about it. This is what we do. So anything that we do before, during, or after the election will be based on the data, the outlook, and the balance of risks, and not on anything else.
Just a quick follow-up. Do your economic forecasts and models take into account the two very different economic plans of these two presidential candidates, Harris and Trump? And if so, how?
No, we do not do that. We absolutely do not do that. We don't know who's going to win. We don't know what they're going to do. We don't act as though we know, and we just can't do that. We basically, we have our forecast. We can run simulations of different potential policies, but we would never try to make policy decisions based on the outcome of an election that hasn't happened yet. That would just be a line we would never cross. We're a non-political agency. We don't want to be involved in politics in any way, so we wouldn't do that.
Nicholas.
Thank you, Chair Powell. Nicholas Jasinski from Barron's Magazine. There hasn't been a dissenting vote on an interest rate decision in some time. If the data do evolve as you expect, if you do have more confidence by the September meeting, do you get the sense that there will be a unanimous vote on an interest rate move in September? Or basically, are there meaningful differences in committee members' assessments of how much more confidence is needed?
So there are always meaningful differences. There are, and we talk a lot before, during, and after.
I'm going to believe you, Carl.
We do have a very robust discussion of these things. You're right that in most cases, people, if they feel heard and they feel that their position has been given serious consideration, for most people, most of the time, that's going to be enough. There are dissents. That's fine. No one has a veto. No single person has a veto. So it just is a question of who will vote for and against. We've had dissents. We haven't had so many during the pandemic era, and it just may be that we've felt more united because we felt under a lot of pressure to get things right. But before the pandemic, we had plenty of dissents, and dissents happen. It's part of the process. There's nothing wrong with dissents, and if it happens, it happens.
Jean.
Hello, Jean Young with MNI Market News. Is a 50 basis point cut as a first cut at all likely or even on the table? Thank you.
I don't want to say, I don't want to be really specific about what we're going to do, but that's not something we're thinking about right now.
Jennifer.
Of course, I haven't made any decisions at all as of today.
Thank you, Chair Bell. Jennifer Schonberger with Yahoo Finance. Not to get into the minutes, but you said there was a real discussion today for moving at this meeting. I'm curious if you could provide some more color on the nature of the discussion today at the meeting about a possible rate cut as early as September.
Well, so, the way the meeting is set up, the first day there's a discussion of financial stability because it's every other meeting we have that, and then we have an opportunity to comment on that. Then we have an economic go-around, and then this morning we have the monetary policy go-around. And I think in people's economic go-around and in their monetary policy go-around, people express their views about this, and there's a range of views. People, as you will know from the speeches that they give, people have different ways of thinking about the economy, and so in the minutes we'll lay this out in a much better way than I can do off the cuff. But there's a range of perspectives, and but I do think that we're a consensus-driven organization. People come together. This was a unanimous decision, and at the end, everyone supported the outcome, not just the voters, but everyone. So I would also say some people examined the possibility, the case for moving at this meeting, but overwhelmingly the sense of the committee was not at this meeting, but as soon as the next meeting, depending on how the data come in.
But there is a growing sense of confidence that you could move at the next meeting, assuming
Yes.
inflation comes.
Well, assuming that the totality of the data supports such an outcome, no question. That is the case. That, as I mentioned, we think that the time it's approaching, and if we do get the data that we hope we get, then a reduction in our policy rate could be on the table at the September meeting.
Hi, Chair Powell, Nancy Marshall-Genzer with Marketplace. Former New York President Bill Dudley wrote an op-ed in Bloomberg earlier this month, which you probably saw, in which he said, quote, "It might already be too late to fend off a recession by cutting rates. Dawdling now unnecessarily increases the risk." Is he wrong?
So this is the judgment that we have to make, and we're well aware of the judgment. We're as I've said, we have to weigh the risk of going too soon against the risk of going too late. If we go too soon, we can, we had a lot of advice, to go ahead and cut after the 7 good months of last year. We didn't. We said we needed to see more. Then we saw some higher inflation. We've seen 1 quarter of good inflation, and we've seen the labor market move quite a bit. And as I mentioned, I don't think it needs to, cool off any more for us to get the inflation results that are related to the labor market. Not all inflation is, of course. So I think it's a difficult judgment to make, and what you see is the judgment of the committee is that that time is drawing near. That time could be in September, if the data support that.
And have the chances of a hard landing increased?
So I don't know whether they've increased. I think they're low. I think this is, you don't see any reason to think that this economy is either overheating or sharply weakening. That's just not in the data right now. What's in the data right now is an economy that's growing at a solid pace, a labor market that has cooled off, but nonetheless, unemployment is low. The data overall show a strong labor market, so that's really what you see. It's neither an overheating economy nor is it a sharply weakening economy. It's kind of what you would want to see, but of course, the job is never done. We're watching to see. Which way the economy heads, and I think if we are to respond to weakness, we're certainly, well equipped to do that. But that's not what we're seeing. What we're seeing is strong economic activity and a good labor market and inflation coming down.
Greg. Thank you so much.
I think the reality is that forecasters, and this isn't just the Fed by any means, forecasters have been continually surprised by, for example, the strength of the economy last year. So I think we had to be pretty humble about giving forward guidance about this, that, and the other thing. We need to be pretty careful about that. And when you're saying you're going to be data-driven, of course, it's always what the data, how they affect the outlook and the balance of risks, but nobody has great vision deep into the future. In terms of a reaction function, that's a long time discussion that people have had forever. I think people have understood for a long time, actually, that we were very focused on bringing down inflation. Nobody was really confused about that. The data have Again, you've seen
bullish
significant
for
improvement in
IWM.
inflation just for the last quarter.
Mm.
Markets move around on the
Not
data,
much,
really, not so much. It's not
actually.
really what we're going to do.
The
It's more
promise
just that
of
the
a
data
September cut.
keep coming in. and
Although
markets
to
are
me
very,
it sounds
very
like they have no
responsive to that
intention
data
of
right
cutting
now.
in September.
Go to Jeff for the last question.
Thank you, Mr. Chairman. I'm going to change gears on you just a little bit from all of the rate talk and whatnot.
I wonder if the market's
with
getting that
Fed
sense.
now being in the books for a little over a year, there hasn't been a whole lot of talk about central bank digital currency, and wondering if you could give us an update on where things are with that. Is that considered a dead issue now? Is it still something that's being discussed within the committee, and what's happening with that?
It's not something that comes up at all in the FOMC. So more broadly, digital finance is an area that has really significant implications for payments generally, instant payments, and it's something that's going to really change the way it's going to make more efficient and hopefully safer and all those things, the way payments are made around the world. And so we have people who are researching that and trying to keep up to speed because we play an important role in the payments sector. Both as a convener and as an operator too.
If Gherkin is unsure there will
terms
be
of
a
the
September
CBDC,
cut,
there's really
then
nothing
JPO
new
has
going on. There's
fulfilled
not
his
much
only
going on at
mandate.
all.
He's
We're
done
not-
a good
we don't have
job
the
talking it
authority
in
to,
circles.
Issue a retail CBDC that's available to the public. We're not seeking that authority. So what we're doing is keeping
Does
up
he
with
need to, though?
keeping up with developments there. Pretty much every major central bank in the world is at least doing that. Some of them are actually seriously looking at implementing a CBDC. We're really not. We're really just evaluating, the story and what's happening out there. I think it's work that we need to be doing which could be very beneficial down the road. But we don't have on a CBDC. We don't have any plan. We would need to go to Congress, and we have no plan to do that. No one here has decided that we think it's a good idea.
Odds of the market correction after he stops talking circles around Schrodinger's dove. I think we've gotten a correction here. I would say that where we've bounced to and where we've climbed since the meeting started positionally, we're in a pretty good range to continue moving up, and actually get like a decent rally out of this. Now, if that's going to be a bear rally or not, that's still hard to say. If it's going to be a bear rally, it's going to stop about here, right? We tested monthly GN on, pretty close on the top of this bounce. We fell back below, or we tested weekly GN, fell back below monthly GN, which I can show you guys. We're above DN, so a continuation out above this is very likely to move up to the long-term trend and test, right? And that puts us around 56.15 or so. I mean, there's still been a lot of short vol. Vega neutral really hasn't moved very far from spot. Gamma max is, but if we start moving up, it's gonna squeeze down, especially once we get above gamma neutral. So I would say either we reject here and we wait out non-farm payroll tomorrow and see the effect of that labor data on the September decision, which is now extraordinarily unclear due to all the talking in circles. Or we just start pushing for it today, and we have the room to push for it today. There's short calls we can squeeze. I'm not sure there's enough leverage to do that, but it could be attempted. I'm just not sure he was convincing enough. And if the market feels that he's gonna lean... Okay, so this is gonna be complex to explain, but I'll try. If the market feels that Powell is going to lean into the Bank of Japan decision and treat that as his cut, then they are going to rapidly lose confidence that he is going to cut in September. And a cut by the Bank of Japan, effectively, I mean, given where current leverage in the system is the same as a cut by the U.S. Less impactful, obviously, but still. They did move to a positive rate now. So strategically, he could do that, right? Well, it doesn't have to be Japan's fault, but Japan took a step last night, right, that tightened leverage in the financial system, right? And if you go back and you look at the market, like in 2007, right, when Bank of Japan first started enacting any kind of policy, right? Let me go back to that for you guys. Hold on. So if we go back here, you know, and let me pop SPX on here, right? This is where the Bank of Japan started making moves. They were like, okay, fuck this shit. You guys have over leveraged our currency. We're going to start moving rates. And, you know, simultaneously, the US did the same. In response to bank failures, they cut rates, right? They eased policy to try to get the economy to recover. The combination of those two tightening simultaneously, well, we all know what that did, right? And that took a very, very, very long time for us to recover from. Years, right? We're not in too dissimilar of a situation now. Except, you know, it's possible that the Fed has learned maybe we don't cut at the same time as Bank of Japan, right? Japan cuts, then, you know, a quarter later we'll cut. Japan cuts, we'll cut. Japan cuts, we'll cut, right? And then, you know, you get time for those assets to balance out. And it could be that that's, you know, part of the approach that they're trying to take here. The problem is the banks still need the leverage, and banks still need to cycle off their balance sheets. And since rates aren't going to fall to like 2%, where they can offload their hold-to-maturity securities at the prices they bought them for, that's not going to happen for years and years, right? Then banks will still need a tightening of conditions. And if Japan cuts now and Powell doesn't cut in September, we'll get a tightening cycle again. Yields will rise, right? And banks will be able to net out. You know, they'll be able to sell their equities at the top, buy their bonds at the bottom, and then net out again, right? And they can just keep doing that. And I mean, so far everything the Fed has done has been in an effort to perpetuate that since March of last year when SVB failed, right? And the banking risk really highlighted itself. But I mean, that's kind of how it looks to me. So I think he didn't do a good enough job convincing funds and institutions, the people moving the money, that he's gonna cut in September, which puts everything kind of in a weak position, right? Like, you know, some leverage has been lost in the system, but things are still maintained at the current rate, right? So, you know, yields really shouldn't be going down because we don't know what's going to happen with labor and inflation. And the JOLTS data was hotter, right? PPI was hotter. PPI is going to be expected to pass through. And then, you know, as we move into fall, we're going to have a rebalancing of those seasonal adjustments that brought like CPI down. So CPI is not really down. It's just that we've moved the basket around, right? Like housing costs are still really elevated. Health insurance costs are still very elevated. Will you cover what you think the market is going to do into close today? Well, if we get support here around 55.20 and push up a second time, we're probably going to push the at-the-money sold calls off. And if we can push past 50, we're going to start squeezing the 0 DTE sold calls that are in that range, right? So we failed the test of 50, but we're still on a bullish trend. I don't think this rejection is an interruption of the longer bullish trend, right? We're almost back into the neutral range here, but I mean, not enough, I would say. Like, we haven't reversed yet. We would need to fall back below ES like 55.50. If we do fall back below 55.50, it's very possible that we just pull back down under delta neutral. But I think here, I mean, we're still in a continuation. And that might be a little bit easier to see further out here on futures, right? We got a pretty decent uptrend going. I think if we fail this, which is a little bit lower than we're at, unfortunately, that would be kind of bad. You know, we're gonna fall back through that long-term trend, retest the October trend. We could then fail that, right? Because gamma's gonna get pretty negative at that point. But I think here we can still just bounce and keep moving up. Also, don't forget tech earnings tonight, right? And if there's one thing that pushes indexes up, it's been tech earnings. I don't expect the market to be as strong now. So I should say that about this next month we're going into, is that the market should be weaker. Right? Leverage is pulled back now, so pumps are not going to be as strong as they were. The ability to hold prices in ranges like above VN or at GN, that's going to be a lot harder because there's just less total leverage available now. Nope, we're not. And vol's increasing. Oil going for 500 BPS. Yeah, I will also say that the heightened conflict in the Middle East and the path of monetary policy in the U.S. has rocketed oil today. And it very well may be that oil steps in and provides all the inflationary pressure we need over the next couple of months. Yes, oil is very inflationary. I am long oil, yeah. QQQ testing VWAP. Mm-hmm. Charm is... that's not updated, is it? The sell-off in IWM is interesting. He didn't stall effectively, though, is the problem. I don't think if QQQ had stayed up, right, and IWM had failed, sure, then he stalled six. Then he convinced people that he's going to remain higher for longer, right? But I don't think he did either, really. I don't think he convinced anyone that he was going to stay higher for longer, and I don't think he convinced anyone that he's going to cut. Which is kind of one of the fringe scenarios where indexes are going to very possibly align. Right, we're going to get positive correlation between them. Because no one knows what to do. You mentioned thread the needle, but I guess he did it by boofing the whole needle. Yeah. Tech. But it's not Nvidia tonight, right? So, gotta think about earnings. I hate this. So tonight's gonna be Meta, right? Meta, Qualcomm, and ARM. So we could get positive move in Google, Meta, and then positive for chips. If it's positive for semis, maybe I should have stayed short IWM. We'll see. Let's see if bulls get support here first. It's way too early to make any kind of decision. The SOM rule comment really threw him off. Yeah, he was very unprepared for that, and that's interesting. So here's the thing about the SOM rule, right? It's a super stupid fucking indicator. It's lagging. It's like shitty 3-month MACD for recessions, right? But the interesting thing about the SOM rule is it's always right? It's a rule, not a theory or anything like that, because it tells you that you're already in a recession. It doesn't really tell you that one is coming. It doesn't sometimes it tells you one has happened. But it's always after the fact, right? So the significance of it is, well, really impactful as far as like the bond market and stuff is concerned. It's not forward looking at all. So happened is it also tells it could have ended if it started. Yeah. I mean, there was a period there where, you know, in 2023 where arguably, you know, by Q2 we had likely slipped into a recession, and the SOM rule had almost triggered at that point. But that's also, you know, when issuance of bills started to ramp up and we started to like monetarily pump ourselves out of that hole, right? 25 is not really where I want to see this. Fine. One second. It's hard to lever up when the dollar's falling. Bulls winning? Well, we'll see. I mean, this is where we'd expect them to try to build support, so. If we push up again, they'll probably squeeze off the rest of the 30-35 sold calls. They're still selling puts in the money and out of the money. So I wouldn't be surprised. But I wonder if this is a move we can make without sufficient breadth. What does end of day positioning look like? Still support at 20, like we've had all day. Still resistance at 30, much less. There are sold calls at 30 and 35. Then things go long up into 50. Above 50, lots of sold calls. So I don't think it's unlikely we move above 50 in the intraday, but we could move above 50 overnight. But in the background of this, the carry trade's collapsing. So, pretty quickly. Also, end of month. Yeah, but it's not like end of quarter or anything. It's not that big of a deal. If we got a crazy pump in the next, like, 20 minutes, that might be pretty interesting. Like, if we could squeeze off the sold calls. But I think even if we did, we would just test 50 again. I don't think it would be like we rip to the moon or anything. Could last nice night have been the final pump for the end of the month? The rug pull after hours and into August. If tech misses, yeah. Yep, that's very possible. I'm probably a little overexposed. Did I get hit on a tech miss? It's only Meta though, right? So tomorrow's far more important because Apple, Amazon. Tomorrow we have not a lot of data, right? I think we have, we have ISM tomorrow. Non-farm productivity, unit labor costs, which are expected to have fallen, although those two reports might not match up. But it's ISM manufacturing, not services tomorrow, so not too important. Bank of England has their interest rate decision tomorrow, but if they cut, that's going to prop the dollar. And I think right now they're only pricing in like it's dropped since Monday. They're pricing in about like 60% for BOE. Quite a lot of weakness in IWM. It almost retraced its entire gain. It's a 35 sold calls, right? And then maybe 40. I think if they can get the leverage, they'll try to push 50 before close. It would be a really spectacular move for us to push much higher than 50, but it's not impossible. Like, if we push up and the sold calls above 50 start to close, we could push up to 75. I know that sounds fucking ridiculous, but that would be that's like the potential range, right? Maybe squeezing these, right? But there aren't a lot of sold calls right here. Not anymore. Not after the earlier pump, right? There's some, like 35, 40, 30, but not very many. Mostly this is sold in the money puts going out of the money, right? Which is bullish too. But this range is largely more sold puts than it is sold calls. The majority of the sold calls are 50 and higher. Like 50 out to 5,600. Sounds ridiculous, but so did a $160 move from last night's low. Why? We hit the bottom of the sauce pot. There was not a lot of room to go but up. And the path going up only got easier as we went up. It's still not very resistive. If it ripped, I'd probably just close my overnight positioning, I think. Like, if we ripped to 75, I would definitely close everything. But that's still pretty far from here. BTC doesn't benefit from the dollar dropping. Gold does. Look at gold. Is anybody long gold? Still just me? It's okay. It's only up like 175 points today. You are? Nice, LSD. Well done. It's been very good. Not gold, not fucking Barrick. God damn it. Are you bullish on BNED? If it drops back to a reasonable price. Chance to fall below 220 Friday? Some. A lot better if it got below 223, 222, where the support is. Failed to break out. Hmm. $12 minutes left. Yeah, today's a very dangerous day to sell contracts. Earlier in the day, it's not so bad, but risky now. Risky after they make the decision, because then price just gets crazy as everyone repositions. Meta earnings incoming? Yeah, tonight. How many 150C did Atomic sell? I don't think he has any of those open, but I'm not sure. Is a weaker market bad for straddles? Higher implied volatility and higher realized... Well, higher implied volatility is bad for straddles. Higher realized volatility makes them a little bit better. If they keep neck and neck, it's fine. If they start to diverge and implied volatility is going up faster than realized volatility, they get a little bit worse. It really depends on the pricing of options. I mean, straddles aren't particularly ideal with VIX above 16, but they work because, well, they're working right now because we have so much macro data and earnings and everything. So we're still having like really big swings that are large enough to pay for the straddles. But generally, as VIX goes up, you want to start moving the spread further apart in order to maintain the same price efficiency. Facebook should do good, right? We're moving into election season. All the boomers are gearing up and getting their Facebook pages ready. Lean hawkish or dovish? He somehow wasn't either. I think the market thinks he was a bit hawkish. Or too uncertain. They really, I mean, really like the small cap push wanted him to come out and be like, we're cutting in September. Data looks great. We're ready to go. And he didn't really do that, right? And QQQ wanted him, QQQ short vol on indexes, the dispersion traders. They really wanted him to be like, rates are going to stay right where they are for a while. And since he landed directly in between those two, I don't think anyone knows what to do. And Japan cut, so technically we got a cut. It's like a shitty one, but or Japan hiked rather. Which strike will 84x today? I think that 55.15 just did. Hmm. Yields are dumping. Yeah, they are. Says the dollar. Doesn't look like they have a good handle on dispersion here either. Forward yield on vol's pretty low still though. So I don't think they'd be afraid to short vol here. The yield curve's almost as uninverted as it was in January. Mm. Lost 20 again. Crushed. So close above DN. Oh. Ding ding. Looks like the Fed will cut when it's obvious, which means after they've started a recession, right? Not that they'll be capable of doing that until Yellen starts issuing bonds, but let's see what's going on with Meta. Meta's at 1.2 trillion market cap right now. Snap back to 500. A strangled QQQ, probably the right index. Yeah, we can pull up Carvana too. Carvana's shitting the bed. That's not good for IWM, by the way. We still have to see what's said during their earnings calls and stuff, so it might not matter much. Was today an easy day to trade? It was slow. What time does Meta release their revenues? Well, maybe we'll get through some of the stuff and we'll look back and see what's going on. So ES climbed back up after retesting the low from last week. Yesterday, we got a pretty solid bounce back above the long-term trends. We managed to hold above the shorter long-term trend, the slightly more bullish one, into the end of the day. And it looks like we're getting a bit of a bounce off of this, possibly some consolidation into a breakout and a move higher, which would push us up towards, 5,600, 5,625 would be the next range for a leg up. Obviously, that's going to be dependent on tech earnings. It's going to be a little bit dependent on ISM manufacturing PMI tomorrow, but I don't think that matters too much. The biggest hindrance to this is going to be dollar declining against the yen pretty rapidly. Bank of England may cut tomorrow, though, and that could support the dollar. That's going to be tomorrow morning as well. Commodities bounced back quite a bit today, 100-point move, and found support on the top of that old trend. This is now a double bottom. Could be a good opportunity to go long commodities into the end of the year if you wanted broad exposure. Dollar down, yields down. Yields down pretty sharply, actually. I think we're finally hitting levels we haven't seen since March of this year. That was kind of when we started getting that hotter and hotter inflation data, or that hot inflation data kind of started to pile up. Correlation didn't really get back on track today. I would have expected to see a bigger drop in correlation, but especially after that FOMC fiasco, but we didn't really get that. Tech earnings will obviously do a lot to push that dispersion trade if people pile back into it. So, tonight's Meta earnings are going to be very important. ARM will be important, and Qualcomm will be pretty important. Carry trade just breaking down, total leverage down to 7.6% or 7.6x. Yield curve more deeply inverting, but the forward yield on volatility is still staying just a bit positive. Correlation on the 3-month moving up with bond volatility, so those are moving more in sync than they were. This is largely what got blown up on the bounce is this increased interest in tail risk hedging. That's probably going to have snapped back pretty hard today, but it won't print for like another 10 minutes. 65.8% of the S&P above its 20-day moving average, and correlation between VIX and cash VIX still remains pretty elevated, and we're still above 50%. We're not as high as we were yesterday. Yesterday we moved up to around 53, but 51 still very, very rapidly becoming more correlated. So I think this higher volatility regime is kind of here to stay. And it'll be hard for them to push that back down to the levels we were at in, June, March, Jan, December. Fed Fund futures now pricing in 3 rate cuts by January. So starting to get a little bit more faith that the Fed is going to cut in September. But also maybe just starting to price in a recession. That's quite a lot of cuts by January. That would be a fairly significant move. Meta, Qualcomm up, ARM down. Yeah, no one gives a shit about ARM. I mean, they're kind of important, but Meta being up is probably what matters here the most. And Meta's up quite a lot. Yeah, snap back to 500, 515. It looks like Carvana is coming back too a little bit. I don't know. I'm guessing they dropped their earnings. OpenApp Qualcomm got a nice like 8% bounce. ARM shit the bed. So Meta, like ARM, Qualcomm, probably weighing each other out, and then Meta up quite a lot. How is that affecting ES? Maybe not enough up to push ES above that 55.85 level. But we did test 55.83. That kind of bullishness will probably carry over a bit into tomorrow. Looks like it's having a positive effect on Nvidia. A little bit on Apple, not much. And a little bit on Amazon. So, yeah. Some positive momentum, as long as Zuck doesn't fuck up in the earnings call, which he does frequently, so we'll see how that goes. Anyway, thank you guys so much for tuning in. I'll see you bright and early tomorrow morning at whatever time I wake up. Have a good night, everybody. Later.
Kenny's Mayonnaise is a proud sponsor of Pickle Financial, so when you get a hankering for some creamy, delicious mayo after a long night of snorting, sweating, and pacing, grab some Kenny's.
It's yours?
No,
Your mother said she found it in your closet.
I don't know. One of the guys must
Must have what?
Look, Dad, it's
Where
not
did you get it?
Dad,
Answer me. Who taught you how to do this stuff?
You, all right? I learned it by watching you.
Parents who buy weeklies have children who buy weeklies.
Just some pickle theme fuckers, not a cult, no. Like them AMC suckers, not a cult.